Good morning, everybody. Welcome back to another episode of the Market Open. It is Wednesday, October 8th, and we are live. I know the background looks a little different, and everyone's wondering, where the heck am I? What's going on? Well, if you were on the Sunday stream with Steve, you would recognize where I am. Are you in India, bro? How is that the first? No, I am back at my parents' house in the basement. I felt like becoming the underdog again, dude. I wanted to go back to my roots. I was like, you know what? I'm getting too comfortable. Need to go back to the parents' basement. No, dude, I was just sitting in the apartment last night, and I get an email from the building management, and they're like, hey, just to give everyone a reminder, from 10 a.m. to 3 p.m. tomorrow, the power will be out in the entire building, because we're going to be doing a entire restructuring of our electric grid. And this will hopefully make sure we don't have to rely on generators anymore if we have any power issues. So for 5 hours, there won't be any power. And I was like, well, apparently this was the reminder email. So I missed the previous email where they probably emailed me a week ago saying this was happening on October 8th. And I'm like, oh, so I've got to go somewhere where there's power. And I tried to book the recording studio because, like, on that amenities floor, they said they would have power, but obviously it was booked up by the time the email came out because people already wanted to reserve some space. So I had to go back home. So I'll be home for today and for the market close, and the show has to go on, and it would suck to have to end the show at 10 a.m. in an hour just because the power goes out. So we're here, we're live, and look, we got a lot to talk about today. We got a lot to talk about today. We got a lot going on. There are so many headlines to get into, which is why this show is going to be long, and we needed the internet and power to be able to keep the show going. And, well, I think let's just get into it. Thank you, everybody, for being here. Good morning, good morning, good morning. Let's start off with space, because last week, the hoodlums had some fun. 2 days ago, the advanced money duplicators had some fun. And today, Space Mob is having some fun. Ladies and gentlemen, ASTS is up 15% in the pre-markets. It is up 280% year to date. And not only that, the Lab of Rockets is up 5%, making a new all-time high. I mean, this is just incredible in terms of what's going on with space. So put in the chat if you are in Rocket Lab or ASTS, and if you are, today is your day. Again, this is the nature of this bull market. Every other week, every other day, you have different companies, different sectors of the market that are starting to participate massively in this bull run, and it's because of actual catalysts that are allowing these stock prices to continue gaining momentum. Now, do these stocks need to stay at these levels? That's up to the market, right? The market's going to decide if these stocks deserve to be here, if people want to take some profits. But the reasoning behind it does not feel like it's something silly or memeish, but rather something very, very real. First of all, ASTS has signed a commercial agreement with Verizon to launch space-based cellular service in 2026. The partnership will use Verizon's 850 megahertz spectrum to connect standard smartphones directly to satellites. Voice, video, and messaging tests have already been successfully completed, marking another major step towards global satellite-to-phone connectivity. This is a big one. I mean, if you're an ASTS shareholder, if you believe in the overall ecosystem of Spectrum and what ASTS is trying to do, and you kind of believe in their SaaS-rooted business model versus Rocket Lab's business model, which is more rooted in launches, you've been waiting for a deal like this that was more material in nature. I mean, ASTS has been working with Verizon for a while, but this type of a deal is some like real meat on the bones for everyone that says ASTS doesn't have that much revenue or earnings. Well, this is the type of deal that can get you there. And as a result, the street is very, very excited about that. 15%. The most important thing about this, it's about to hit 87 in the pre-markets. There you go, 87, busting through 87 in the pre-markets. This stock was at $36 2 weeks ago because of the SpaceX acquiring some parts of their competitor thing news that happened. And I mean, it's almost up double. Well, it's up more than double from where it was 2 weeks ago. Literally 2 weeks ago. And as a result, our boy Matt Money, shout out to Raul, he upgraded this website. So now anyone can look at the stock draft in real time. It's 2025stockdraft.com. Matt's running away with it. So I was ahead for like 3 days. Matt is now at 48.5%. It updates live, so we don't have to wait for the refresh from Google Finance. And I'm at 40%. So, and Matt has not only Rocket Lab, he has ASTS too. He was one of the only people that really believed in space during the stock draft, and he took the entire sector with him. And now he's running away with this. 86.76. It just hit 87.50. It was up almost 17% in the pre-markets. This is incredible. Absolutely incredible. So shout out to those in ASTS. And then Rocket Lab, it got to 60 yesterday. And then after hours, you had some news on Rocket Lab, which also got the market very excited. And that news, courtesy of our boy Sam right here, is announcing a multi-launch deal with IQPS. The significance of this deal is Beck expanding Rocket Lab's presence in the satellite launch market alongside Tesla and Bezos. GMI estimates that satellite launch vehicle TAM will reach $29 billion by 2032. The real number will likely be even higher as the space commercial TAM continues to grow. And the fact that Rocket Lab got a deal with Synspective, I think it was less than a week ago, and now another multi-launch deal with IQPS. By the way, Neutron's not even live yet. That's going to be the big thing in 2026. You put all those catalysts together along with what's going on with ASTS, and you have a massive, massive space run that we are seeing over the past week. Rocket Lab, for those, just to give you guys a little bit of context of what's going on, it's up 30%, 35% based on the pre-market move in the past 5 days. Like, this is, I mean, like last week you could buy this thing for $43, and today it's pushing 65. So this is pretty incredible. This is pretty damn incredible. Again, if you're in the chat and you've got Rocket Lab or ASTS, I know a lot of people are in this space mob. Shout out to Chels, obviously Matt, Vince. I think Sam is in this. Chris, we did a deep dive on ASTS a while ago. And, I didn't buy in because I was like, I don't know. My exposure was Rocket Lab. I thought that was enough. But no, that deep dive was when ASTS was 35. We had Anna Panman. That dude, he's like a legend in the space mob community. He came onto the show and gave us the thesis. And if you bought into that thesis, you've done very, 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 very well. So congratulations, everybody. Yeah, shout out to Brett. Brett's been preaching Rocket Lab since this thing was $7. I didn't get in at 7, but I got in at, I have 2,500 shares at $26. So I'm holding on to those shares. And dude, I did not expect Rocket Lab to be a big win for me. I took advantage of the tariff dip. The tariff dip. 15 was the lows. And I think I picked up some at 18, but I averaged up around 27, 28. And so my average ended up being 26. And so I'm in it. I don't think that much about it, but like, I didn't expect this to be a stock I'd be up 150% on this year. And that's what we're getting. Now, do I think it's expensive? Yeah. I mean, like objectively looking at the financials, I think Matt would say the same, right? Like it is expensive, but I think it's also being rooted in momentum, excitement, the overall space TAM growing. And if it dips, it dips. This is one of those things where I really do think 10 years out, it's a much larger company, and you kind of just buy and hold and let the thesis play out. So there you go. Rocket Lab and ASTS, first story of the day. Absolutely incredible. Congrats to those that are in it. And hopefully that momentum continues into the market open as we see these stocks hit new all-time highs. Jensen, he was live on CNBC. He did like a 40-minute interview. We're not going to listen to all 40 minutes of it. I want to play the first 3 minutes because he said a lot of things that were very interesting about what's going on with AMD, the whole creative financing of these OpenAI partnerships. XAI got a $20 billion round that was announced yesterday, and Jensen's going to be participating in that. So here's Jensen in his own words explaining what's going on in the state of AI financing.
AMD and OpenAI. It's got a lot of people trying to figure out what the dynamics are of this industry. What do you think about it? Did you know about that deal before it was announced?
Not really, but our deal is very different than theirs. We've been working with OpenAI through Azure, Microsoft, and OCI, and CoreWeave, and so through third parties for quite a long time. In fact, in 2016, I delivered the world's very first AI supercomputer called DGX-1 to a startup, a nonprofit startup in San Francisco, and that company turned out to have been OpenAI. And so we've been working with them for quite a long time. The OpenAI partnership is an addition to what we're already doing with them on the cloud. All of the cloud contracts, we're going to continue to execute on all that. But our partnership with them is quite unique in the sense that this is the first time we're going to sell directly to them. Until now, we've been only selling through the clouds. And so we're going to keep doing that. But the thing that's really exciting is that now, by selling directly to them, we could help prepare them for a day when they're self-hosted hyperscaler. And our agreement basically entails us selling entire systems and infrastructure to them. We're the only company in the world today that really focuses on building the entire AI infrastructure, from CPUs to GPUs to networking chips and switches of all kinds and all the software stacks that go along with that. And so we're quite a unique partner for them to be able to do this.
I guess the question becomes, it's great for you to sell it directly to them, but they don't have the money to buy it at this point. Is that's why the deal was structured the way it is, where you'll get a stake in OpenAI over time?
Not
Okay, so this is the important part where Jensen dives into the details of like how the deal is structured. Also, he's going to talk about the AMD partnership, and you'll kind of see his analysis on what's going on with that AMD deal with OpenAI.
They don't have the money yet,
Yeah.
and the way that it's gonna happen, for every gigawatt of AI factories, you're probably going to need about $50 to $60 billion for the land-powered shell and all the computing and networking and all that, everything that goes along with that. And they're going to have to raise that money through, first of all, the revenues, which is growing exponentially, equity or debt, and they gave us the opportunity to invest alongside other investors when the time comes. And so it's not something we have to do, but it's something that they're giving us the opportunity to do, and I would love to do. One of the things that we did, we invested in OpenAI early on. My only regret is that we didn't invest more. I mean, this is the most profitable, well, the most valuable startup company ever. And so this is a great opportunity.
You mentioned that your deal is very different from AMD's. AMD is in a situation where they're basically giving away a big chunk of their company to be able to be a partner with OpenAI and sell them some of their goods. Is that how you read it?
Yeah, I saw the deal. It's imaginative. It's unique and surprising. Considering they were so excited about their next generation product, I'm surprised that they would give away 10% of the company before they even built it. And so, anyhow, it's clever, I guess.
Yeah, I wondered the same thing.
Okay, so we'll go back to more of the interview in a bit. There's a lot of parts of the interview, so probably throughout the entire show today, we'll get different parts of it. But that was the part that I think is the most important to take a look at. Jensen, you could tell, has a lot of respect for AMD. I mean, Lisa Su is one of his further out cousins, right? But listen to that quote again. I saw the deal. It's unique and surprising. Considering they were so excited about their next generation product, I'm surprised they would give away 10% of the company before they even built it. He's talking about the MI450. Anyway, it's clever, I guess. I mean, look, I don't know about you, but to me, it very much feels like he's throwing some shade at AMD. And I don't even think he's doing it in a disrespectful way. I think Jensen's just like, wait a second. We were able to invest in OpenAI in order to advance the ecosystem. And as a result, OpenAI is going to pay us a ton of money for our chips, but we're able to participate in that growth. AMD, to get OpenAI to buy their chips, they couldn't agree. They couldn't get them to agree to the deal and actually nail down an actual partnership until they gave up 10% of their company. And you would think if you have such a good chip that's way better than NVIDIA, or at least as good as NVIDIA, you would have the pricing power, or at least the leverage in a deal with a company that says we are desperate for compute, to be able to say, hey, you can take 2% of the company, but 10%, like we're not going to give up 10%. But no, they have to give up 10%. So, I mean, look, I don't think the AMD OpenAI partnership is a bad partnership at all. I think Lisa Su is very strategic for engaging in that partnership. However, you can tell from Jensen's perspective, he's like, dude, this is not the same as NVIDIA. Like, NVIDIA is growing exponentially across the board. We don't need OpenAI to grow. And we also don't need to give away equity of our company as a sort of a negotiating tactic to get the other side to even buy our products. Now, Jensen's not exactly telling all parts of the story, because he definitely needs to invest in the entire ecosystem of AI to keep the party going. And he talks about that more in the interview, but he doesn't have to give up equity in their own company. Which is kind of the difference here. So look, I don't think it's bearish AMD or anything like that, but I did find it very interesting that Jensen kind of took the moment to say, this is clever, I guess. It's unique and imaginative, but it's not really something that is comparable to NVIDIA. Nonetheless, the circular financing of AI continues to happen. Here's another update from what happened yesterday. And again, we'll go back to more parts of that Jensen interview later throughout the show. This is not confirmed yet, but pretty much all sources outside of Elon's XAI have confirmed that NVIDIA will be investing in XAI as a part of a $20 billion funding round. This was announced yesterday after hours. The financing will be tied to the NVIDIA graphics processing units, aka GPUs, that XAI plans to use in Colossus 2, which is another large data center site that XAI is trying to build with over 550,000 GPUs. And NVIDIA is investing as much as $2 billion in the equity portion of the deal. However, $7.5 billion will be overall equity, aka investors actually trading their dollars for equity in XAI. 12.5 billion is going to be raised through the debt markets, which means we are getting the second round of funding of debt markets. The first one was Oracle, raising about $13 to $15 billion in their corporate debt. And we'll talk more about what happened with Oracle yesterday in terms of corporate bonds that they offered to the market. I think this was 2 weeks ago. And now XAI raising about 12.5 billion as well from the debt markets. My take on this is that it definitely, from a third-party outsider perspective, if you're not like obsessed with what's going on in AI, feels a little weird, right? It's just like, okay, so it's not free cash flow. It's not like revenue. That's especially not for OpenAI or XAI, because I mean, they have revenue, but they definitely don't have the profitability or free cash flow to be able to fund this themselves. So they have to tap the debt market. So they have to have these creative financing deals, as Jensen mentioned with AMD. However, the caveat here is that two things. One, is there an ROI or not? We're going to find out. Either all of us that are bullish AI are going to be super right, and everything's going to be incredible in the next 10 years in terms of not only financial positions that we have in these companies, but also the productivity of humanity. Or we're going to be dead wrong, because there is no productivity. There is no margin enhancement. There is no efficiency. All of it just goes to shit. And this all blows up in our face. It's going to be one or the other, I think. I don't think there's a middle ground. So if you're betting that it's going to be the former versus the latter, then you're betting that overall there will be an ROI. That ROI will be effective. And the result of that ROI will mean that eventually the XAI, the OpenAIs will have, the Anthropics will have the revenue that justifies their ability to spend as much as they're spending on all these gigawatts of data centers. And they will be able to pay back everything that they have to pay back, whether it's corporate debt or equity, in terms of delivering an ROI for shareholders that are betting in these early stages because of the progress in AI. It's one or the other, right? You either believe there's that ROI or you don't. Now, in terms of the actual nuance of the creative financing, I just think that if you have a technology build out, and this is just my personal opinion based on what I've been seeing, that is as massive as we've all been witnessing, you know, obviously one could argue a much bigger build out than the internet, then you're going to have creative financing. Like, it's not possible to just say, oh, we're going to, you know, put everything together and we're going to have all the money to fund it. And that gets into the conversation about what happened with Oracle yesterday. So Oracle was down almost $80 billion in market cap yesterday. It recovered a majority of what it lost. I think it's down like 1% from yesterday. And the reason for that was because the information somehow got some data. I don't know from who. My gut is it's from some hedge fund that wanted this to come out because they had a short position, that said Oracle lost nearly $100 million from rentals of the Blackwell chips. Oracle's gross profit margins from rentals of servers averaged 16% in the past year, which are much higher than the gross profit margins of their other OCI cloud business. And that internal Oracle data shows the financial challenge of renting out NVIDIA chips. Oracle came out yesterday and said, hey, none of this is true. None of this is accurate. It's way off base, was the exact wording of what they said. So that calmed down the market. And then number two, Jensen said yesterday and today that Oracle is going to be wildly profitable. However, setting up the data centers, setting up the GPUs, setting up the server racks, that costs money. And in the meantime, before you're able to even get the financing to rent everything out and then collect the revenues, you're going to incur the costs, because you can't just ignore that. You can't delay the cost from being incurred on your financials. So whatever financials got leaked to the information that caused a, $80 billion drop in market cap for Oracle yesterday, kind of misses the point. The point is that, yeah, all these companies, it's just like Uber or Amazon in the early days, right? None of these companies make money. If you're a growth investor, the entire playbook is you don't make money. You don't want the company to make money. You want the company to take market share. And when they take market share, then they have pricing power. They have price elasticity. They have the ability to offer new products and services on top of the network effects that they've already built. This is the history of pretty much every single tech company that is exponential in today's day and age. Like, they don't make money for a long time. They capture the market. They compete vigorously. They spend a lot of money. And the beautiful thing about American venture capitalism is that we are able to subsidize those companies. Like, my investment in Figure's not making any money, but I'm hoping that one day Figure is like number one or number two when it comes to humanoid robotics, and that they're unprofitable today, but they will be wildly profitable 10 years from now, and that I will get a return on my capital. So I don't think this Oracle news yesterday was like even a something burger. It felt like it when Oracle was down 7% on the day, but at the end of the day, you have to recognize they take costs in the short term to be able to generate revenue in the long term. And the data wasn't even accurate based on what Oracle said. So you got a lot of different hit pieces that are coming out across the board to try to delegitimize what's going on in AI. And maybe it will be right long term. I mean, we're going to see. But at least in the short term, I don't think any of that stuff has meaningfully stopped any of the momentum that we're seeing in AI. And based on this OpenAI NVIDIA deal and OpenAI AMD deal, NVIDIA right there up about 0.5%. It looks like that's not going to be slowing down anytime soon. The Oracle news was so dumb. Yeah, but remember, on the market open, right before I was about to leave, the news dropped. And, the CNBC, Bloomberg, everyone started covering it. It was like, oh, is this the death of AI? It's like, no. And, I think now it does go to show how fragile the AI ecosystem is. I mean, like Nvidia went down to 180, like all these one of these companies slips up and the whole industry could fall pretty quickly. And eventually that probably will happen, right? Eventually there will be some top to all this, but if it's not happening for the next 5 years, this is not something that can scare you out of the market, especially out of these AI names, if you believe in the broader thesis. So, and it wasn't even true, right? Oracle came out and said the numbers are way off base. So Oracle's going to have an investor day in 2 weeks, which means they're probably going to talk explicitly about this issue and explain, hey, yeah, maybe our margins aren't the best right now, but the reason for that is XYZ. Also, our margins are not the margins that were reported. And, they're probably going to give a lot more analysis on what's going on. So between what Jensen said, between the XAI deal, between OpenAI and AMD deal that came out yesterday, it does seem like we are getting more creative elements of funding. You either call bullshit on this and you say, hey, this feels like 1999 when all these internet companies were investing in different companies, yada, yada, and it was all just BS. Or you believe that AI is very real. It's not going anywhere. And if it's not going anywhere, yes, you're going to need creative forms of funding, but that does not mean that these companies are bad long-term in regards to what they're building. So that's what we got with AMD, OpenAI, NVIDIA, and Oracle. We'll get back to a little bit more of the Jensen interview in a second, but I do want to comment on a couple other stories that we got going on. First of all, this is going to scream top, but I do not shy away from sharing stories that scream top because at the end of the day, we try to be as objective as we can on the channel. Roundhill is coming out with a meme stock ETF today. The ticker symbol is MEME. Meme. These are the top 10 holdings: Opendoor, Plug Power, Applied Digital, QuantumScape, Cipher, Rigetti, Bloom Energy, Quantum Computing, Hims and Hers. I didn't know Hims was a meme stock, and then IONQ. So you can tell me in the chat, who agrees with these stocks being classified as meme stocks in this portfolio. These are the top 10 holdings. I think there are some more holdings, but these are the ones that are the main ones. And look, I am very curious to see how much assets under management the ETF is going to get. It's going to go trading live, I think, as soon as the market opens. It's not open yet, but ticker symbol MEME is up there. Momentum stocks is a better name for it. So there are a bunch of different momentum ETFs that are out there, and a lot of them have the Palanters, the Robinhood, the CoreWeaves, the AppLovins, the Coinbases, etc. This one feels like they're trying to explicitly, what did they say? They said meme stocks represent a unique force in today's markets where retail participation and rapid sentiment shifts can drive extreme volatility. The Roundhill meme stock ETF is the only ETF in the world to target exposure to meme stocks. Meme is an actively managed ETF. So they're not really even focusing on momentum. It's almost like they're admitting we don't think these companies are real. We just think that retail is going to ape into them. And we want to give investors the ability to get exposure to stuff that people are aping into. Quite frankly, I think the most valuable part of this product is going to be two things: retail aping into the meme ETF because they just want to get a basket of meme stock exposure. And number two, hedge funds being able to use this as a form of either hedging or shorting or whatever they need to do to this to be able to generate some type of alpha against playing the retail meme quote unquote trend. So I don't know. Now I disagree with Hims. I do not think Hims is a meme stock. If you look at their financials, it's not a meme stock in my opinion, but I guess the others, Cipher just got an investment by Google. Is that really meme stock? Applied Digital has a massive deal with CoreWeave. Some of these names are a little with Bloom Energy. I didn't think Bloom Energy was a meme stock. I don't know enough about Bloom Energy, but that's in there for some reason. And so I guess we're going to see. There's a lot of people that do not believe Opendoor is a meme stock, obviously. So I wonder how this is going to be treated. At the end of the day, if your stock is in this, this will create more inflows for your stock if the ETF gets more inflows. So that is one bright side to it. But nonetheless, that is going to be coming out later today. And we will keep a track of it and see kind of what goes on from there. So that's what we got with a new meme stock ETF. All right, what did you guys say in the chat? 67% of you do not own Rocket Lab or ASTS. 7% of you own both. 6% are ASTS. 21% are Rocket Lab. So a decent chunk of the chat owning Rocket Lab. Rocket Lab still holding that 65 in the pre-markets, and then ASTS holding 85. Now, these names, look, AMD got to 227 in the pre-markets 2 days ago, and it gave that up. Now it's at 213. It fell to all the way to 203. I'm not sure if Rocket Lab or ASTS can hold these levels. I don't think it would be surprising to see them take a little bit of a dip, but if they can hold it and potentially expand it, this could be a really big day. A really, really big day for ASTS and Rocket Lab. and we're going to see when the market opens. Melanie, thank you for the gifted 20. Appreciate you, Melanie. Thank you for being here. Melanie has, if I'm not mistaken, a pretty large Rocket Lab position, and she's been in Rocket Lab for a very, very long time. So she is spreading a little bit of the love right here. Melanie, thank you, Melanie, for all of you guys that don't know, she's also a teacher, and that to me is very, very special because my mom and my sister were teachers, and teachers have always had a special place in my heart. So, and one of the thing about teachers is that they are under freaking paid. I'm sorry, but in this country, we do not pay our teachers enough money. So the fact that Melanie is a teacher, she's investing, and Rocket Lab, I would imagine, has done really well for you, Melanie. I think you've been in it since like $7. That really makes me happy. Really, really, really makes me happy. So shout out to Melanie. I think she teaches like middle school or kindergarten too. So she works with little kids, and I just love that. I really, really do love that. There you go. 20 gifted memberships courtesy of Melanie. Rocket Lab 6485. That is up 5.4% in the pre-markets. My sister didn't quit, but now she's like an administrator. Same thing with my mom. But my sister taught for like 7 years. My mom taught for my mom taught for 15 years, dude. That my mom, like the way we paid the bills when I was growing up was because the way we had healthcare was because she was a teacher. So, and I went to school with her all the time, and she had to go through a lot of shit being a teacher and she loved it. She enjoyed it, but teachers go through a lot of shit, bro. You're like, there's an emotional element to working with students, but then there's also like just the grind of like teaching for 7 hours a day. Like it's a lot on someone. And so I have a lot of respect for teachers. So thank you, Melanie. Appreciate that. And congratulations right here on Rocket Lab. Brandon, thanks for the super chat. $65 covered calls on 1024 for Rocket Lab. What would you do here? I'm thinking 80s for November. Yeah, I would think the same. If you are, dude, every day it's like covered calls on Hood, covered calls on AMD, covered calls on Rocket Lab, ASTS. So what do? It's one of those markets where covered calls are obviously getting smoked right now. So yeah, I would roll out 80s for November. Do I agree with Rocket Lab's valuation on the quantitative basis? No. I mean, like I'm not an expert on Rocket Lab, but the numbers are a bit aggressive in my opinion. However, I don't think it has to go down. So I wouldn't keep the 65s and just imagine that it's going to come down so you'll be safe. I would, it taps your strike. As Jason said a couple of days ago, you get out of it. You just, even if you have to pay a little bit of a debit, because you're at 65 and the stock's at 64.88, you should be able to get away with a credit getting out to 80s or even, 75s. So yeah, if you're in covered calls on ASTS or Rocket Lab, I would get out. And I would let those stocks go ahead and make a move if they do continue to make a move. So that's what we got. Rocket Lab and ASTS, again, making a pretty strong move. Let's get back to Jensen. Again, he said some more things, and we will periodically revisit this interview because we have some other headlines. But let's take a little bit of a look at what else he was saying, and then we'll keep going from there.
And Lisa Su, who, by the way, is a distant cousin of yours.
Yeah,
right?
she's terrific.
AMD.
Yeah, she's terrific.
The way they've set this up, though, of giving it away, they're also making some big assumptions that their chips are going to be able to compete with your chips that are coming out down the road. Do you think that's the case?
Well, our chips are quite special, and we're running really fast. We're the only company in the world today that builds all of the chips inside an AI infrastructure. And today, back when we first started, 5 years ago even, an Ampere chip or a Hopper chip is just one chip. Today, if you want to build one of these AI supercomputers, it takes a whole bunch of different types of chips to get the performance out of it because, Moore's law, the transistor itself is really slowing down. And we want to create those X factors of performance increase every single year. And we're delivering these new systems every single year. And every year it's multiple times faster than the last generation. In order for us to do that, we have to optimize the entire AI infrastructure. That supercomputer is the most complex computer the world's ever made. And we optimize across all of that, design new chips every year. So one chip alone is not probably going to be able to deliver the type of results we do. And but anyways, they're a really good company and we take them very seriously and we just kind of have to keep running fast.
Let's talk about vendor financing, because that has been something that has raised a lot of questions on Wall Street since you cut this deal with OpenAI. Yesterday, Bloomberg is reporting that you have a $2 billion in financing that you're going to be involved with XAI to help them with these same stories. But this idea of circular financing, your customers can't afford to buy these chips yet, so you're going to help them out with money along the way. That leads some people to think back to what happened with companies during the big buildup like a Lucent or a Nortel in the early days. Is this different, and if so, how?
Well, first of all, XAI, I'm super excited about the financing opportunity that they're doing. The only regret I have about XAI, we're an investor already. Mm-hmm. The only regret I have is I didn't give him more money. almost everything that Elon's part of, you really want to be part of as well. And
pretty encouraging words from Jensen. The only regret I have is that I didn't give Elon more money when starting XAI.
And he gave us the opportunity to invest in XAI. I'm just delighted by that. And so that's an investment into a really great future company, and I'm really excited about that. That's not vendor financing per se, but what's going on in the world versus what happened in 2000 is just dramatically different. Back then, as you recall, there were pets.com, hospitals.com, and all of the internet companies combined was what, $30-40 billion in size. If you look at the hyperscalers now, that's where the first tranche of AI infrastructure is building. If you look at the AI, the hyperscalers, at about $2.5 trillion of business that's already operating today. That business, that $2.5 trillion business, and the capex that goes underneath that is about, call it $500 billion. Mm-hmm. That transition from a classical CPU-based computing to now generative AI computing powered by GPUs, that transition is just starting. So we've got to build into $500 billion worth of capacity infrastructure that's already naturally growing by itself, and we're in the beginning phases of that. If you just look at NVIDIA's AI infrastructure business, call it a couple of $100 billion so far, we're a couple of $100 billion into a multi-trillion-dollar build out. So that's number one. The second part of it that's really unique is that we have a new generation of AI companies. The new AI companies like OpenAI and Anthropic and xAI and companies that are Thinking Machine Labs from Mira and Ilya Sutskever's SSI and Misha's company Reflection. And I mean, there's a whole bunch of amazing AI model builders now. This generation of AI model builders, what's happened in the last several months, a transition happened that is really, really important. For the last several years, they've been generating tokens, these AI tokens, basically at a loss. And the reason for that is because the early AI models they were super interesting, really captivated a lot of attention, but they weren't useful enough to pay for. The last several months, it's been very clear that the new technology is now reasoning, mm-hmm. It's doing research. Before it answers a question, it goes on the web and studies other PDFs and websites. It can now use tools, generate information for you, and it creates responses that are really useful. I use it every day, to the point where now the tokens are profitable.
The question, though, is who is going to continue to pay for that build out? Is it the big companies like a Procter and Gamble? Is it consumers who are going to do this? I mean, my doctor showed me the AI that he's using, and it's incredibly helpful, but there's still a question about whether he's going to pay for it or the company he works for is going to pay for it.
Well, hopefully both. I think there's the consumer part of it. A lot of OpenAI customers are consumers, and they're paying for it. But the thing that's really cool is that the enterprise AI build out that's happening now, my favorite enterprise AI service is Cursor. Cursor is an AI coder. And every one of our engineers, 100%, is now assisted by AI coders. And our productivity has gone up incredibly. And so you're now seeing enterprise AI companies like Cursor, Open Evidence, I love Lovable. All of these companies are some of the fastest growing companies in the world, and they address enterprise. And so enterprise AI is here. I wonder how.
All right, so we'll get back more of the interview in a bit. But as you can see, Jensen right there making the argument that consumers and enterprises will deliver the ROI on AI long term as the AI build out continues to commence. And, Jensen continues to believe that this is a thriving ecosystem that's going to have a ton of different companies participate in. And that's why NVIDIA is engaging in all this different type of vendor financing. Also, to NVIDIA's credit, I mean, just like logically, they have $60 billion in cash. What do they do with it? They can't buy back their own stock. They could, but it's going to make a dent, or I should say it's not going to make a dent in the share price or in the shareholder returns. They can increase the dividend. I mean, you can get 5 cents instead of 1 cent, but what is that going to do? They have to put it somewhere. And logically, we don't know if this whole AI thing is going to work out or not, but it makes sense for them to continue to keep the ecosystem afloat by investing in a Figure, investing in a Cursor, investing in an xAI, OpenAI, Anthropic, and saying, hey, if we believe these companies are going to change the world and they need our product, like, yes, the money's probably going to come back to us because these companies are going to use some of our investment to buy our product. But these companies also need the money to be able to even have a chance at this exponential future of artificial general intelligence. And as a result, they need the funding, and they can either go to the debt markets, or we have 60 billion in cash. We can get some equity in these companies that we were helping to support. Some of these are going to fail completely, but a couple of these are going to win. And the ones that win are ultimately going to be the ones that pay us back. So to Jensen's credit, like, he doesn't know what to do with all that. And they're going to have 240 billion in free cash flow by the end of next year. What do they do with that? They got to put it somewhere. And so from that perspective, I think investing in the ecosystem still ends up making sense. Okay, I'm putting a new poll in the chat right here. I'm very curious what people think about this. Gold, all-time highs in the pre-market. Silver, all-time highs in the pre-market. Copper, basically at all-time highs in the pre-market. What the hell is going on with commodities? And my question in the chat is the run in commodities scaring you? Because I don't know, dude. It's a little scary. I mean, and we've talked about this at length over the past couple of weeks, which is that, hey, if cash is trash, you got to put your money somewhere. By the way, freaking Ken Griffin yesterday said that, the US dollar is losing all of its supremacy, which is why money's going into gold. And Ray Dalio went as far yesterday to say that 25% of your portfolio, I'm not joking, he said 25% of your portfolio should be in gold. He's telling people to put 25% of their net worth in commodities, which is quite incredible. I mean, like, usually that's not the type of financial advice you would get from any financial advisor. But the fact that Dalio and Griffin, and you got a lot of other people coming out there saying that the US dollar is not where you want to be, treasuries is not where you want to be. I mean, look, short term, it doesn't feel the best for the dollar. It really doesn't. But at the end of the day, if we're going to keep spending like drunken sailors in the United States, which we are, I mean, the big beautiful bill only accelerates that. And that's not a political statement. That's just like the fact is we're spending more money. And I don't know if Harris were president, if that would change, right? Like this is the whole Bitcoin thesis. The function of this government, or the function of centralized power that's controlling money, that has a monopoly on violence, is that they will continue to debase the currency and continue to print money. And as a result, this is why I think assets like a gold, like a Bitcoin, are getting a bid. The question becomes, does it hurt the broader economy short term? And I don't know the answer to that question, but I don't know if the run stops anytime soon. And, gold was basically stagnant from 2011 to 2020. It has doubled in the past 2 years. I mean, that's a hell of a run. Again, at the year to date, it's up now 52%. Does it kind of top out for the next 10 years, or does this go up another 50% next year? These are questions that are very important to try to figure out. Silver, again, also breaking all-time high. Silver's up 62% year to date. And I'm just very curious to see what happens with the broader commodities thesis. In the chat, what do we have? 55% of you saying no. Okay. So it's about almost 55-45 on commodities scaring you. Yes or no? I mean, you can also put in the chat what commodity you're the most allocated to, whether it's gold, silver, copper, or something else. We saw TMQ yesterday, which is a miner for the commodities, get a massive run up. Is it still up? It's up another 9% today. It was up 230% yesterday after Trump rolled back some of the regulations in Alaska. So that one's getting some love. MP was up yesterday. USAR was up. I mean, they're still up in the pre-market. All these companies that are rooted in trying to get the most out of these commodities. Lithium America is down a little bit, but that's up 300% over the past week, are doing pretty damn well. So that's what you got. Amid people are getting less interest on their cash, so they need to put it somewhere. Gold makes sense. That's fair. Ironically, though, money market inflows are still at 7.3 trillion. I mean, total assets, or 7.5 trillion. Inflows were 50 billion last week. So as much as people hate cash, they're still stuffing cash into the money market. But they're still keeping their cash in the money market funds. I guess just new cash is coming from different areas and finding a way to get into gold. Such says, amid FYI, the most recent 13F shows Bridgewater holds 318 million in gold, equal to 1.3 to 1.4% of the U.S. equity portfolio. Okay, so that is actually very important information, because if Dalio is saying, hey, 25% of your net worth should be in gold, and they own, a third of $1 billion in gold, 1% of it, of their U.S. equity portfolio, he's definitely talking his book a little bit as well. But given Dalio's been such a doomer on the concept of American hegemony and China eventually taking over and all of those things, I mean, it would be logical for him to say, ditch the dollar, because basically for the past 10 years, he's been saying America's going to collapse. And maybe America does collapse. I have a little bit more optimism around the state of America. but he does believe eventually the empire falls. And if the empire falls, the US dollar falls too, which means there's going to be some new asset to put your money into. And if it's not the Japanese yen or the Chinese yuan, then it might end up being gold. So that's what we have in the context of commodities. Triple V, thank you for the $200 super chat. Thank you again for being here, sir. Appreciate you. Hoodie right here, 145.66. That one's been holding the 140s, and Grab tried to break 660 yesterday. Is at 630 right here. Cannot break 660. Triple V very heavily long in Grab and Hood. So those one holding up. I mean, Grab, look, I think it's on its way to 7. It's got a lot of work to do to break through. First, we got to break 662, but if we can, it would be very exciting. And if not, I think holding the 630s is still really good going into earnings, which would be good to see. And then Robinhood, look, I'm fine with Robinhood chilling out in the 145s. And I think someone like Triple V, who is very heavily allocated to Robinhood, is also okay with it chilling out in the 145s. By the way, Nebius chilling out in the 110s, 115s, 120s. I think there's a lot of Nebius bulls that are okay with that. Like, if you're in a stock that has had a massive run, the number one thing I think you care about is protecting that run, not having that run turn into a memeish run, which the easiest way for it to turn into a memeish run is if it collapses and gives back all the gains. Or if it just continues going to the moon without anything fundamental. And so I think Nebius and Hood, although some people are concerned that it's not at all-time highs anymore, Nebius down from 135, Hood down from 153, I think it's very healthy. Very, very healthy and normal. And hopefully we continue to see some consolidation and we can protect the levels that we're at right now. S&P, that's up in the pre-markets, up 0.21%. AMD, 213. SoFi, trying to break 29 today, 1.46%. Again, the student loan news was bullish yesterday. The crypto news was bullish 2 days ago. Hopefully that continues. SoFi right there, 28.55. Tesla's up 1%, although Tesla is down 5% from yesterday. We got 3 minutes into the market open. Real quick, let's just cover what happened with Tesla yesterday. They launched 2 new vehicles. Model 3 and Model Y Standard is what they're named. And yeah, it costs $36,990 for a Model 3 and $39,990 for a Model Y. Look, the elephant in the room is these are not affordable cars. So, and it's not just me saying that. I looked at a lot of the Tesla bulls last night on Twitter. I mean, you had some big Tesla bulls that were saying this was not what they expected. I mean, they really thought there was going to be something that was more affordable. However, if you live in a good state like Colorado, I mean, you can get an extra $9,000 to $12,000 off of the car based on the EV subsidies. Not every state has that, but I mean, you can get a Model 3 for almost like $27,000, $28,000 in Colorado based on the amount of credits they give. So it really is dependent on your geographic location. A lot of people are wondering, why the hell would you pay $40,000 for a standard Model Y that has less features than $44,000 for a premium Model Y? I mean, like if you're going to spend 40 grand for a car, you're probably going to finance another $4,000, right? Like 4,000 cannot be the deal breaker between someone buying a car and not buying a car. So I don't know. It's really not that exciting to me. However, the standard range at least keeps up with what people thought would happen, which is 321 miles, which is good. But overall, it was a bit of an underwhelming announcement, and that's why the stock fell 5%. So we'll see how the stock continues today. I don't think it has to continue to fall, but it wasn't the Archer partnership that people thought was going to happen. That did not take place. But still, overall, it was at least good for them to put out something that potentially could be more affordable. So there you go. All right, we got about 30 seconds until the market opens. Let me say this right now, so hopefully everyone is listening and I don't get a ton of questions tomorrow because I know I will get a ton of questions. I will be missing the market open tomorrow. Let me say that again. I will be missing the market open tomorrow. I don't want to, but I'm getting a root canal, aka another excuse for me to go see my hot dentist. No, I'm just kidding. I'm getting a root canal, and I tried to delay it for a Saturday, but the tooth pain became unbearable on Sunday. And so I called them and I said, can we do it this week? And they have an opening, unfortunately, only on Thursday at 8 a.m. So I'll be getting a root canal. I will not be here. I don't know if I'll be able to do the market close, if I'll be able to talk, but I do need to get that root canal because the pain has been a little bit too much. So I'll be missing tomorrow, but we'll be back on Friday and we'll keep the show going. All right, Wednesday, October 8th, 9:30 a.m. Thank you, everybody, for being here. The stock market is now open. All right, wake your ass up. Let's get into it. Hoodie opens up 145.55. That's up 0.45% on the day. Rocket Lab and ASTS. Let's see what goes on. Rocket Lab 65.34. That's up 6%. All-time highs for the Lab of Rockets. ASTS, big Verizon partnership today. 85. That is up 14% on the day. Absolutely incredible for Rocket Lab and ASTS. Congratulations if you are in the space sector. They are doing very well on the day, and if they can hold on to this momentum, then it would be very excited. I mean, basically the stocks would be re-rated today if they continue to hold on. So there you go. ASTS, that's up 14% on the day. Tesla loses some of its pre-market action. That is now, you got a red candle right there, 433, still basically flat, a couple cents away from going red. There you go. Tesla just went red, but basically flat. NVIDIA, that's up 1.2%. All right. Looks like Jensen said some things that were positive on the interview today, this morning, 187.25. We played a couple clips. We'll listen to a little bit more of it later today. 191 is the all-time high. AMD, that's flat. SoFi, 1.2%. Google goes down. Grab, that's up about 1.2%, 635. Amazon, that's flat. Meta, that's flat. PayPal, that's flat. PayPal tried to break through 75 yesterday, 74.82. Right now in the pre-markets. Bitcoin, unfortunately, went from 125 to 121 yesterday, right now at 122. So that ended up hurting MicroStrategy and some of the crypto derivatives. MSTR is at 333. Wow, Rocket Lab 10%. My goodness. 67.58. Oh my. Oh my. Congratulations to those in Rocket Lab. Big shout out to Matt, Money, and Vince. I mean, these guys have been leading the army on this thing. That's up 9% on the day, 67.39. That is green. ASTS, is that continuing as well? ASTS, yep, 86, not 87. ASTS basically up 17% on the day. Goodness gracious, dude. Again, I'm long Rocket Lab, 2,500 shares at $26, and I've always just thought of it as a mini SpaceX, so I haven't sold, but this is pretty incredible. I really do plan on holding it for the next decade. Like if SpaceX's TAM is in the trillions and Rocket Lab is, you know, a smaller version of them, a much smaller version of them, but that's where the opportunity is. One day they could be potentially as big as them. Then I think that's why you hold on. 67.41, up 9% on Rocket Lab. Let me know in the chat if anyone is selling Rocket Lab or ASTS, or if you're buying Rocket Lab or ASTS. If you're selling them, selling calls, selling puts, buying, let me know if you're doing anything with your position today. S&P, that's up a little bit. NVIDIA, 1.5. NVIDIA breaking 188. Let's see if it can go for 191. Hoodie, that's up 1.3%, back to 147. Palantir, 183. Grabby Grab at 632. Coinbase, that's up about 0.5%. CoreWeave, that's up 3.6%, getting some love from the entire AI ecosystem. Nebius, that's up another 3.5%. Archer is down 7% because there is not a Tesla partnership. So that one is going down. Iran diluted by 875 million yesterday. I don't think it's that big of a deal. At the end of the day, Iran was up 500% in 5 months. I mean, like, what did you expect them to do, right? They were going to raise some money. So that one's down 3%. Stock is still doing very well, but they did do some dilution. Joby's also down 10% because they raised about 500 million in dilution. And that's why that one is down 9.8% on the day. Quantum, are we moving? Quantum D-Wave, that is a new all-time high, folks. 38.29, that's up 7%. Rigetti, that is up 7%, 46.94. That's basically a new all-time high. IONQ, is that past 80? That is 80.7, a new all-time high, 1.78%. Quantum continues to do well. Tesla goes red just below 430. So Tesla gets down. And then AMD, that is slightly flat. I see a lot of people say I'm managing my covered calls. I don't see too many people saying they're taking profits. I see most people saying we're holding, managing covered calls. I don't see a ton of people buying, which is fair. Look, this is a lot of momentum to buy into. I mean, there's definitely going to be some FOMO buys today, and it is what it is. Maybe Rocket Lab continues to break through 70. Who knows? But it is a lot of excitement to buy into this. And you just got to ask yourself if you're okay with knowing it could fall and, you know, you're ready to DCA. 67.45 right there. Wow, Rocket Lab broke 68. Must have happened a couple of minutes ago. 68.53 on Rocket Lab. That is green. BMNR, what do we got? BMNR is slightly flat, 59.60 on BMNR. I mean, Ethereum came down from 4,700. Tom Lee's also probably diluting to buy more Ethereum. So it makes sense why BMNR is down from that 65 level. FICO is down 5.5. Okay, I don't know the headline on FICO, but you do have a decline. Again, last week they unveiled a plan to cut out the middleman, which is why the stock was up like 20%. Looks like there is a new headline today, and that's why that one is taking a little bit of a hit. FICO down 5%. ASTS, are we breaking 88? 87.60. Wow, it hit 88.99. My goodness. My freaking goodness. AppLovin, are we all the way back? AppLovin's pretty much all the way back. 653. All right, if you bought the dip at 550, 570, even at 600, even at 630 yesterday, you're making some money. So there you go. AppLovin presented, you know, a pretty decent opportunity in a bull market. Growth stock, S&P 500 newly included into the index, down 20% in a day. Not many times you get those opportunities. So for anyone who had major conviction on it, you're in. It almost reminds me exactly of the Wells notice on Robinhood a year and a half ago. And like that created a great opportunity for people to buy the dip. So there you go, app. Lovin up 3.5%. This is also really healthy in a bull market. You want to see names recover after things that probably aren't like thesis breakers. And an SEC probe, like, could it be a thesis breaker? Maybe, but there's so many variables to it that it's probably not a thesis breaker, at least in the short term. And you're seeing people ready to allocate capital and buy that dip, which is what you want to see in a broader bull market. ASTS back above 88. That's up 18%. That trying to go for 89. HIMS 58.43, getting some love. It was at 59, so down a little bit, but still green. CrowdStrike's at 498. Coinbase is up a little bit. Rocket Lab continuing to move. I ran again with that dilution yesterday. That's why that one is down 5%. And that is red. Rocket Lab, are we above 68? We are at 67.63. Still trying to go for 68. SoFi goes red. That's weird. Not sure why, but SoFi goes red. By the way, I downloaded the CSV of the meme stock ETF. For those that are just joining, there is a new ETF called MEME, ticker symbol MEME. I guess you can't trade it yet, but it's launching today. Maybe it launches a little bit later today. The top 10 holdings, yeah, you can't trade it yet. It's probably launching a bit later today. The top 10 holdings are, well, it's going to be $10. Okay, so it showed it on the screen. These are the top 10 holdings, but the other holdings in this ETF are, besides what you see on the screen, BMNR is in this, IREN is in this, Joby is in this, Oklo is in this, D-Wave is in this, SMR is in this, and SoundHound is in this. So the holdings are APLD, ASTS is also in this. APLD, ASTS, Bloom Energy, BMNR, Cypher, HIMS, IONQ, IREN, Joby, Oklo, Open, Plug, QBTS, QS, Qubit, Rigetti, SMR, and SoundHound. Those make up the Roundhill meme stock ETF. Grab, by the way, losing 630, 625. And so I guess they consider BMNR a meme stock as well. But there you go. When can we buy it? I don't know. I thought it launched in the morning. I guess maybe it launches a little bit later in the day, but it is launching today from what I saw. So MEME is the ticker, and you'll see when it's live. MicroStrategy, that's up 1.23. ASTS 86.54. HIMS up a little bit. And then Roblox as well. That's up 1.2% on the day. Yeah, GameStop and AMC are not in the ETF. I guess they didn't care to put GameStop. GameStop and AMC, I guess, are just like older memes names that many people care about, or that not that many people care about anymore. Figma's up 7%. I think this is on the ChatGPT partnership. Zillow, Figma, a lot of these names got some momentum based on ChatGPT saying you can now chat with your apps. And so I think that's what's helping them. Is it live? Oh, it's live. There you go. Okay. So meme, MEME, that is the ticker symbol. Volume is 7,000 within the first 5 minutes of launching. There you go. That is live. And those are the buckets of stocks that you can now buy. Tesla, 1.23%. I asked you guys yesterday on the market close how many people were disappointed by the Tesla announcement. I think it was like 80% of you said it was not an announcement that you were happy about. I don't feel that seriously about it, but at the end of the day, it's like it is kind of boring from Tesla to release two models that are $3,000 cheaper. Like I was surprised because I was like, I thought they were actually going to go for something affordable. Now, I didn't have full conviction in that, but at the end of the day, it's like, dude, it's just not that much more affordable than the previous vehicles. But it looks like that was the announcement. So will it drive some incremental volume of vehicles? I don't know. I mean, my strategy, and I'm not the CEO of Tesla, but I think a lot of people agree with this, is just slash the cars to such a cheap price that you give people FSD for free for a year, and then you force them to fall in love with FSD, and then you collect juicy SaaS revenues at 90% margins, 85% margins. If people, opt into $100 a month or $8,000 full-time for buying FSD. And I feel like Elon said that was the playbook many times over the past 2 years. And it doesn't look like they're necessarily executing on that playbook at all. Because you would think they give up all their margin to get people to get into FSD, but that's not what's happening. So I guess we're going to have to see long-term how this one ends up playing out. SoFi right there, 28.02. That one's flat. BMNR, Tom Lee is probably dumping some stock, and that's why this one's dumping 58.60. That one is down on the day by about 1%. I get more excited about BMNR at 50 or low 50s, 51, 52. I think ETH would have to get around 4,100 to get there. And maybe it does. But if it naturally gets down to that level, that's when I get a little bit more excited. UNH, how's that one doing? UNH, wow, almost 370 on UNH. 230 to 370, not bad. Even if you bought in the 280s, 290s when it had that initial dip, if you just survived dealing with the 270s or the 230s, you were back up above water at 370. NVIDIA also trying to get back to 189 and then hopefully breaking 190, which would be very, very, very exciting. Literally no one is going to buy the $40,000 Model Y basically instead of the $45,000 Y Premium. Yeah, I mean, like 5,000 I don't think makes the biggest difference in the world for someone who's buying a car like that. So I don't know. I don't know if that's going to be enough. Admit these cars worked out before the tax credit rug pull. Had the admin not changed that, the car would have been a $32,000 car. Yeah, but you can't blame. I mean, look, if you want to sit around and blame the tax credit going away, be my guest, but that's not going to solve the problem, right? Like at the end of the day, that's what happens. Business is dynamic. Shit happens. Okay, no more tax credit. You got to adapt. And so if this is the best they could come up with without the tax credit, I don't know. It's just like what I saw yesterday universally was people saying this was just like not what they thought when they considered an affordable car. And the problem is Q3 volumes were good, but now that the EV credit is away and this is not that affordable, is Q4 going to be anywhere near 497,000 cars delivered? And if it's not, what happens to the stock? And going into 2026, if that's not, like these are the questions. Now, granted, rates are coming down, which is naturally going to help. But at the end of the day, there's going to need to be some incentive to get people to be excited to buy this car. 182 right here on Palantir. That is flat. Right now, Reddit goes below 200. Wow. Reddit got a couple upgrades last week. So now granted, Reddit, I've always said Reddit is expensive. I missed Reddit. I had it at 100. I let it go at like 115. But I definitely missed the run up. But it is down right here, 3% on the day. 191. Webull, this one had an ugly day yesterday, down 7%. That one, wow, down another 14% in 2 days. I don't know why. I don't know if there's a headline. I didn't see a headline yesterday. Webull, I mean, this stock was almost at 17. Well, the stock was at $80 when it went public, but it had that run. But it was at, I think, 16 to 17, or at least 15 a couple weeks ago. And this one getting hit now. Circle, that's down 1.7. TLT, that's up a little bit. Bitcoin at 122. Ethereum at 44. BABA, that's down 1.5. How about Rich Tech Robotics? That stock is down 2.83%. Oklo, that stock is down 0.5%. SMR, that stock is up 1.2. So that one goes a bit green on the because Amit stopped using Webull. No, I think there's something else going on with Webull, bro. We looked at their earnings together. I think their earnings are not good. I mean, we looked at the options growth, and I hate to compare it against Robinhood, but that they are the leader in the space. And when you compare them, it's night and day. And that's okay because Robinhood's 130 billion, Webull's like 7 billion. So like it's not supposed to be the same type of growth, but it's not even anywhere close. And that's where you really wonder, like, all right, do I just buy the leader and pay a premium, or do I buy the competitor and not get the best business? I think that's the issue with Webull right here. Qs are up a little bit on the day. Where is the Max 7? Meta is at 708. That one continues to struggle. Apple is at 257. Microsoft broke 530 yesterday. Microsoft 525. And then Google's been stuck in the 240s, 244 is what we have on Google. Poet, that one's making a move. Again, another semiconductor name that's been picking up some momentum. That's up another 11% on the day. Year to date, how much is Poet up? 42%, past month up 64%. So this one's definitely made a broader move in getting some people excited. What's your thoughts on Plug? I don't know if the demand for hydropower is as intense as people say it is, or at least as some of the analysts that upgraded Plug think it is in the age of AI. If it is, then, Plug Power is one of the core names that's been talking about hydropower. They've been around for this was actually one of the first stocks I bought on Robinhood back in 2020. I think I bought it for $1, sold it at like $1.50. So I've known this company for a while, but yeah, AI might be a tailwind for the amount of demand they get. I just don't know if it's like legit, if hydropower is going to be a massive source of energy. Nike, is that one continue to be down? Nike 68.97. That's down after the earnings. It got up to 75. So that one continues to take a hit. Do you have the data center watch list? Yeah, let's pull that up. What do we have? Data center watch list. More green than red. Oracle's up, CleanSpark's up, Bitfarm's up, Iren's down, Cypher's down, GE Verinova's down, CEG's up, Vertiv, VST, those are up. CoreWeave and Nebius, great days, both up 5%. Oklow's down, and then Hive, that one's also up. Iren did some dilution, so it makes sense why that one's down. But the rest of them still holding on. Do you have any thoughts on Air Systems? I don't know enough about it. Roy really likes it. It fell 20% on their earnings. I don't know. Roy, if you go to the end of the Tech Bros podcast on Monday, Roy was actually talking about them. I think if you go to his channel too, he did a whole video on them. I don't know enough about them, but they did fall a decent amount on those earnings. Robinhood right here, 146 grab back to 629, and then the S&P still flat on the day. Salesforce and PayPal, are we getting a move out of these? Salesforce continues to get hit. Even this week, Salesforce has sucked. 236. PayPal launched their ad managers yesterday. PayPal goes red again. Small business ads officially are live on PayPal, and that is something people are excited for. But that is down. UBS is bullish on gold. They said the ongoing U.S. government shutdown has injected fresh momentum into the trade alongside mounting fiscal concerns in Japan and France. Additional support continues to come from the renewed U.S. rate cut cycle and concerns about the U.S. dollar's long-term value. While the scale and speed of the gold rally may mean volatility could pick up from here, we still see reasons to position for further price gains into next year. So you're getting some of the big banks saying, hey, we think gold is not something you shy away from at this time. ASTS, did it go through 90? Wow. Passes through $90 on ASTS. My goodness, dude. Congratulations to those that are in ASTS. $90 is no joke. There you go. Busting through 90, 20%. What's the market cap of this company? 35 billion? Okay, I'm scared to ask the next question, which is how much revenue do they have? Do they have any revenue? I'm not bearish ASTS. I'm just saying, like, do any of the ASTS bulls feel it's aggressive, or is it just like show goes on? Show goes on? There you go. That is the heat map for the day. You got tech that's holding up a little bit of the red. Everything else, or holding up a little bit of the green. Everything else is red. Zero? Wait, actually zero? I thought it was like at least 5 or 6 million. Maybe I was thinking of a different company because we covered their earnings last time. 90.3. All right, so you have $35 billion worth of investors betting that the revenue is going to come, and when the revenue comes, it's going to be gigantic. And I mean, it's no different than Oklo, right? I know the ASTS is a different company, but the same sort of philosophy applies to why Oklo is worth $20 billion. There you go. ASTS, $35 billion company. What's Rocket Lab's valuation? 34. Now, Rocket Lab has what? They do $500 million in revenue a year, roundabout. So price to sales is, if we do the math on that, 70, 65. Rocket Lab's price to sales is almost the same as their stock price. I mean, look, as long as they continue the growth, they can keep it up. I wouldn't buy here. Like, just objectively, I wouldn't buy any of these stocks at these levels. And I don't understand them as well as other people understand them. But I also don't think I would sell here. You know, that's the nuance. Like, maybe if I'm super heavy, maybe, but like, and you know, I think a lot of people understand what I'm saying because I'm deep into Robinhood, and after the run it had, I have not sold a single freaking share of Hood because I believe in it so much. And so with Hood and ASTS, I mean, if you're in this thing, you know, 10x ago, then you probably just believe in it. Now, I'm not buying Robinhood here either, right? So it's one of those things where I want to protect these gains, but I don't know if I want to get more exposure as it gets into these all-time highs. 68 for Rocket Lab, trying to break through 68.53, and ASTS still holding the 90 level at these levels. Oh, Carisdale is short BMNR. Oh boy, bring it on, Carisdale. This is the fun of the markets, baby. You have conflicting opinions and conflicting perspectives, and you get one of the most notorious short sellers that says, we're short. BMNR down 2% on this. We're short BMNR. The digital asset treasury playbook has become basic and unoriginal as near identical copycats overwhelm the market. Premiums are collapsing, and the ability to issue shares well above NAV to boost ETH per share is disappearing. Rest in peace to digital asset treasury companies. Okay, I didn't read through the whole report, obviously, but if that's their thesis, that there's copycats, that's a stupid thesis. Because, like, the copycats will die. but not the winner. I mean, Tom Lee clearly said that in Singapore. He was saying, hey, like a lot of these guys, he agrees with Kerrisdale. A lot of these guys can do what we're doing, but they're not going to be able to accelerate the growth of ETH per share like we're doing it. So they're going to die out. I mean, Saylor has said that about the Bitcoin treasury competitors. So if that is the core of their thesis, that there's competitors, I don't think that's the best thesis. Okay, let's read through this real quick. Competition is exploding. $100 billion in planned capital raises by firms chasing crypto treasury strategies has removed the scarcity that kept premiums high. Okay, so core thesis seems to be competition. The OG DAT MicroStrategy has seen its premium slide from 2.25x NAV to 1.4 after unpopular financing and policy reversals broke the spell. Just quick thoughts right there. Just because MicroStrategy has lost its premium because they're issuing all these different preferred shares and stuff doesn't mean that that's happening, or that could happen to BMNR. I don't want to say it's a false equivalency, but so far it kind of sounds like it's a false equivalency. Tom Lee has proven to be an underwhelming meme lord. Wow. No cat videos, no speeches to mortgage your house to buy ETH, poor utilization of cap locks, emojis, GIFs, and AI slop, too TradFi and boring. Lee pales in comparison to Saylor and Chamath. Bro, these guys are going for his neck. Bro, that is aggressive. That is a little aggressive. My goodness. AMD, by the way, breaking through 220. BMNR down 1.5 on that. AMD finally back above 220. It's got $7 to break all-time highs. Got $7 to break all-time highs for AMD. Also, I kind of think of that as a compliment. It's good if he's an underwhelming meme lord because that means he's actually explaining the thesis in a way that makes sense and not in some, oh, just buy the stock because it's going to go up. Like that's a good thing. I don't know what, if they think that's a diss. That's not a diss, in my opinion. That's actually a sophisticated way of communicating a thesis if you don't have to use the meme-ish tendencies that some of these people have to use. Tom Lee, okay. He says BMNR's premium has been sliding lower and lower and will probably continue bleeding until its NAV is or it's at NAV or below. The lower it goes, the slower the ETH per share accretion until it collapses below 1. MNAV is 1.4 today with 40% downside. They're still posting this thread because it's at 9:51. It's 9:52. So we'll get back to it when they finish posting the thread. But I don't know, dude. Already, I'm not that excited about that thesis. Their two arguments are it'll go below NAV because there's copycats. Okay, but if the copycats lose, I don't think BMNR has to lose. And the number two is that Tom Lee's not as exciting as a Saylor when it comes to communicating the thesis, which I don't think that's a real argument, quite frankly. I think that's just an ad hominem attack. Rocket Lab right there, still up 9.7%. ASTS is at 88.72. It did hit 91, back down to 88.65. I don't know. Does anyone in those few 5 tweets, does anyone buy into that? I don't. It just sounded kind of cringe in my opinion. Palantir goes red. Robinhood close to going red. SoFi down another 1%. Don't know why SoFi's down. Grab trying to go green. And then Reddit getting hit down 3%. Feels cringe, right? Like that doesn't feel. I'm short BMNR because Tom Lee doesn't know how to use emojis. Yeah, like what is that? What type of nonsense? Also, Kerrisdale is not the most amazing short selling. I mean, they've gotten a couple names right, but they've got a lot of shit wrong too. They're no Hindenburg. Hindenburg is different. You know, Kerrisdale is whatever. So I don't know, dude. We'll get more into their thesis and see what they're saying. But if that is what takes BMNR down, that I think that's a buying opportunity. Unless they actually provide some compelling evidence. But saying digital asset treasuries are boring. Okay, that just means the ETHZillas and the BTBTs of the world are not going to get the capital. Someone's going to get the capital. Unless we get a recession, then it's different. But if someone gets the capital, it's going to probably go to the winner. AMD, though, 223. I will check resistance in that 225 range. This is very exciting to see AMD kind of get lifted up. I don't know if there's any catalyst today, but it fell below on Monday back to the low 200. So it's very nice to see it coming back up. 225 does have some major resistance. 200,000 shares. 200,000 shares. Nothing, I mean, it's not impossible to get over that, but it is a decent chunk of shares that will have to be bought to break through 225. Kerrisdale also shorted MicroStrategy in 2024 and lost a lot of money. Really? They did? Did Kerrisdale short MSTR? I didn't know that. Oh, shit. Yeah. Look at this. Kerrisdale's thesis, unjustifiable premium. This is almost the same thing they said about Bitmine just now. I mean, MicroStrategy had all-time highs in 2024. If they shorted them at the start of this year, it would have made sense. But 2024, MicroStrategy was at $500. So if the same thing plays out, I mean, this short might bite them in the ass. Soundhound My goodness, 10% day. Is this because of the meme stock ETF launching? Like why are some of these names that are in that ETF getting this momentum? SoundHound right there, 9% on the day. And that is green. Dutch Bros, I don't know why Dutch Bros is down, dude. We had Matt on the show a couple days ago. And, he talked about how they're just trying to get a lot of their logistics together before it begins to scale. He's pretty bullish on their long-term trajectory, on their ability to compete against Starbucks, their offerings, all that stuff. But I don't know why this one's taking a hit. Not sure exactly. Let's go to the stock draft. Matt is running away with this. 48.27%. He's up 150% on Rocket Lab. ASTS, he's up 109%. I'm at 41%. Steve's at 8%. Tanner's at 24%. And then Chris is at 13.6%. So you got Matt, the overall winner right here at 48.27 at the moment in the stock draft. Rocket Lab 66, slightly down. Next is dumping. Next decade is down about 7%. Again, for next decade, I will say the same thing that Matt says every time anyone asks him about it. It is a serious long-term play. You cannot do technical analysis on this. You can't be greedy with this. The insiders are buying because they believe long-term they will have juicy revenues in oil and gas. If you want something that's producing revenues today, VG. If you want something that will produce revenues in the future, it's next decade. But you have to believe in the oil and gas industry, and you got to buy this and not look at it. So I don't think it's worth getting stressed day to day on this stock, given the thesis really does. It's almost like a startup, right? Like you got to buy it and just forget about it. But this one is down about 6% on the day. Lilly, that's up a little bit. Rocket Lab still up 8%. CoreWeave up 4%. Coinbase up 1%. S&P still holding 670. SoFi trying to climb back to 28. But that one is at next. They changed their CFO. Okay, that's probably the reason. Yeah, usually whenever there's a C-suite change. By the way, did you know Derek White of SoFi stepped down? I found that out a couple days ago. I forgot to mention it. If I'm not wrong, he was the head of Galileo, right? If I'm not wrong. Yeah, he was the head of Galileo at SoFi. So I don't know if that's bearish or not, but maybe maybe that could have been the reason why SoFi was stuck for a couple days, because they lost one of their execs. So that could be one of the reasons. But SoFi trying to get back to 28. Oscar 21, that's down. Again, Trump said some bullish stuff about them a couple days ago in regards to ACA subsidies. The Democrats, by the way, there's some reporting this morning by the Politico that the Democrats and Republicans are getting closer to a deal. Trump also confirmed this a couple days ago. And, there's an argument maybe by Sunday night they're going to have something real. But we're going to have to find out. By the way, October 15th is when military members don't stop getting paid. So the shutdown is all cute and dandy until people stop getting paid. And so if this is not resolved by October 14th, people are going to miss a paycheck. And that's when I think you're going to get a lot of people to be upset. NAV means net asset value. Net asset value. So it is the actual total value of all the assets inside of a company, in this case, the treasury companies. So if you trade at a premium against NAV, just like you trade at a premium against your earnings, right? Price to earnings on a regular stock. That is what you need to be able to run an effective treasury. BMNR right here, 58.87. Okay, let's go back to Carisdale and see what else they said about BMNR. Management changed reporting just as growth stalled. After August 25th, it stopped providing NAV per share and share count. Key data investors need and have demanded. If per share accretion was improving, they would be marketing it. Last month's accretive $365 million deal at a headline $70 wasn't what it seemed. Once you value the attached warrants, it was effectively a discounted cash grab dressed up as a premium raise. They're talking about the warrants that they gave to investors to raise $365 million. DATs are just pretty much dumb. Dude, did some college intern write this? What is the wording of DATs are just pretty dumb. Who wrote this? In what world can rando after rando launch shell after shell to issue equity endlessly to accumulate the same liquid tradable asset without all these shells trading down to a discount of their NAV? Okay, I actually agree with that. I do agree that all these copycats that don't have the velocity of the ability to raise are going to go broke. But that's not a reason to short BMNR. They can go short something else. I don't think you short the leader in the space unless you just believe the entire space falls apart. And we're not short ETH. If you want ETH, just go buy ETH. It has never been easier. BMNR's whole pitch is to get investors to overpay for copying a playbook that no longer works. No strategy, no scarcity, no reason. This company deserves a premium. Okay, did Tom Lee respond? Let me see. No, I don't have a response from Tom Lee. Whoever's saying Tom Lee respond, there's nothing on Twitter that he responded to. At least not yet. I imagine he'll respond eventually. Bitmine goes green, 59.38. That's a weird thesis, bro. It's just a weird thesis. I don't think it makes sense. I think it makes sense for other people, for other DATs, but not this one. Amit, should I roll to 115 call February 2026? Yes. Yes. For everyone asking if you should roll a call that is $30 underwater, the answer is yes, unless you think Hood is going back to 115. Like, you sold a call for 115 for February. You said, hey, I don't think Hood's going to get to 115 by February. Hood's at 145 in October. I mean, you got to roll. You got to probably go out to 2027. You lost that trade. You have to, if you want to protect the shares, you can probably protect it, but you're going to have to, send your shares away for a while. And that's okay. In my opinion, that's all right. Because Robinhood's already, got a lot of momentum, unless it goes up another 230% next year. Like, if you roll it out to like 220 next year, I think that's not crazy. It's just you won't be able to make premium off the shares for another year, which is okay because you get to keep the shares. So I think if you're struggling with the decision to roll or not, you have to ask yourself, do you want to keep the shares? If you do, you roll. If you don't, you let it go. But when you're that underwater, you have to roll. BMNR still going green even after that Carisdale response. See, this is not, I'm like objectively, I have a big position in BMNR, but objectively, I don't think this is a good short report. And I do agree with part of it. I do agree with the idea that launching DAT after DAT is stupid. Like, all these random digital asset treasuries are dumb and they're all going to go bankrupt or they're going to get acquired. But that doesn't mean MicroStrategy goes bankrupt. That doesn't mean BMNR goes bankrupt. Like, the leaders of the space, if the underlying assets continue to become more relevant in society, much less the entire financial system, which we've done a lot of work on this channel to understand what is going on with Ethereum in the context of Wall Street, then I think you bet on the leader. And maybe the leader fails, but like, the idea that you short the leader just because there's copycats, I don't see that as compelling. And I don't see the AdHom attacks on Tom Lee as that compelling either. I don't think so. AMD 222, NVIDIA back to 189. Let me check 190 resistance and see if we can get there. Looks like AMD and NVIDIA stepping up today. How about Broadcom? TSM, I think, is also moving. Broadcom, that's up another 2% as well. Okay, so whatever Jensen said today on CNBC, getting the market excited. 190 resistance is 310,000 shares. Okay, so it's got some work to do. 310,000. Ethereum, are we making a move? Ethereum back to 45. BMNR 59.80. Tesla goes green. Okay. Slightly green on the day, even after the announcements yesterday. Rocket Lab, are we holding 65, 67? And ASTS, is it holding below 90? 86.50. All right, so 91.41. I think you got an $85 close on ASTS. You get a $65 close on Rocket Lab. You got to be really happy. You got to be really happy. Even if you get like 62 on Rocket Lab, 80 on ASTS, those are massive, massive moves today. So anything above that, I think, is good. Soundtown, I do not know why that one's running, but it's running. Navitas getting a 7% day. That is green. Grab moving back up to 630. Fell to 623. Now back at 637. And then NVIDIA just below 189. So Dell was a big one yesterday. They increased their revenue and EPS targets by double. Revenue goes from 4% to 8%, EPS from 8% to 15%. Dell should be up 8%. Dell should probably be up more. I mean, Michael Dell was on CNBC yesterday, and he said, look, eventually there will be a top to the data center build out, but based on the customer conversations that we've had, we do not see that coming anytime soon. And so he's being pretty honest of like, hey, look, eventually we're going to be building data centers that we don't need, but right now the demand is more than we can handle. And so that's going to be massive for Dell. That's going to be massive for SMCI. And if Dell and SMCI can somehow find a way to inch out another 1 or 2% on their margins, like, their EPS growth is going to continue to propel, not just on the top line, but they've got to be able to do that. Now, the thing about this is, if Dell's increasing projections by double, does SMCI do the same? Or is Dell beating SMCI in the server rack game? That is the big question. And for those that are bullish on SMCI, you either got to take a bet that SMCI is going to follow, or that Dell might be the winner. But both of those getting a ton of love right here. NVIDIA still 189. Figma's up 11%. It's got to be the ChatGPT partnership. I don't think there's more than that. I'll see if there's anything else. By the way, Google, speaking of data centers, $10 billion in India. Google is building the world's first India data center, $10 billion to build 1 gigawatt of a data center. It's their first $10 billion data center investment in the country. They made a lot of investments in India, but this is the first data center investment. So continues to expand. They're not spending 10 billion for no reason. And as a result, there's going to be more demand for compute. Figma right there up 11% on the day. I don't see any headline on Figma. What about Rubrik? How's that one doing? Rubrik had a dip a couple days ago. Rubrik 81. That's up 2% back into the 80s. Okay. What else do we see? Oscar and UNH, they're okay. Is App tanking again? Is it? App is, well, it's not really tanking. It's losing its gains for the day, but it's not tanking. 621. I mean, look, it's above 540, which was the low. So at least it's holding that 600 level. Clean Spark, this one's moving. Wow, 9%. I mean, let me check the short float on Clean Spark. I think it's above 20%. That definitely could be a candidate. NVIDIA inching up to 190. Short float 20.4, 21% basically. Yeah, that could be a little bit of a squeeze. ASML, is that moving? That's down 1.8. Again, a lot of these names have run a ton over the past 2 weeks. So ASML taking a breather. Nebius, all these names is not that crazy. But this one losing that $1,000 range that it was at. Is there any news for Bull? I don't see any fundamental news for Webull. But this one continues to get hit. 6.5%. Would you sell Bros puts here? I don't know enough about the company. Again, the philosophy on selling puts on a name. Remember, when you're selling a put, you're agreeing to buy 100 shares at a price lower than the current price today, and you're getting paid a premium for that. You got to really believe in the company, right? And you got to believe it's a good company. So for SoFi, when I sold those $24 puts, I'm totally okay with buying SoFi at 24 bucks. Dutch Bros, I just don't know enough about it. So if you're bottom fishing, yeah, Dutch Bros is probably attractive if you think it's bottomed. But I mean, stocks can go to zero, right? I'm not saying Dutch Bros goes to zero, but I just don't know enough about it to say 47 is the bottom. So you would have to do a little bit of due diligence there. 47.81, that's down 0.31%. Grab 640, okay. Trying to break above that. And maybe 660 has a shot. NVIDIA's still up 2.2. Tesla goes red, and then Hood and Palantir both up about 1% on the day. TMQ, is that still moving from yesterday? Yeah, that's up 7%. Intel, that's down. Lithium Americas, 846, that's also 2.24%. All right, so not a crazy market open. Again, heat map is pretty red across the board, except for some of the big names, like a Microsoft, NVIDIA, and Broadcom. Everything else is kind of getting hit. Look at energy, look at utilities, look at consumer defensives, insurance, financials. If NVIDIA and AMD were red today, you'd probably be seeing a red S&P. But you are not seeing that yet. SLNH, that one also another semiconductor name. That one's moving 30%. Tied to the data centers, this one was up about 50% last week. And then it came down 20%. So that one making a move again. And then Circle, that's up about 0.5% on the day. DoorDash right here also at 279. Gold, silver, and copper continues to do its thing. It's moving. By the way, Stifel said we're raising our price target on Tesla from 440 to 480. So you're getting a little bit of a move, at least from that price target. Also, Goldman raised their target on Nebius from 120 to 137. Basically, the idea is we see a 4x risk reward based on AI demand outstripping supply. The same argument being articulated by a lot of these banks around supply versus demand. And that's why Nebius and CoreWeave continuing to get a pump. Qs and SPY, are they pushing all-time highs? What's the all-time high on the Qs? 609. Yeah, Qs are really close. Again, you got a lot of red today, but NVIDIA, and I guess AMD, maybe a little bit of Amazon is enough to help. And SPY, all-time high is 673. It's at 671.50. Trying to push all-time highs as well. Duolingo's also getting a move. I feel like Duolingo goes up 4% and down 4% every other day. That one is just like volatile, up and down about 5%. But that is green. And then Fermi, that new IPO we had, that is down about 3% again. For those asking where I am, I went back to my parents' house today because my apartment last night sent an email that said from 10 to 3, the power is going to be out because they're like fixing their electric grid or something. And I was like, well, I kind of need power. So yeah, I came back this morning. And that's why I'm here. Webull dropping because today's the first day insiders can sell. You're right about that. Actually, you're right. Yeah, you are right about that. I saw that headline yesterday. I forgot. This reminds me of CoreWeave at 99. I mean, CoreWeave fell from 150 to 99 after the earnings, but 99 was the price, or that was the price of the day they could sell. So it fell all the way to 90 because the insiders took profits. I think the CEO sold about 300 million worth of stock. I mean, you're probably getting some insider dumping on Webull. They probably got their shares at like 40 cents and they're selling at 11.87. So that could be what's happening as well. Okay, let's go back to Jensen. So we listened to a little bit of what he had to say. Let's listen to a little bit more. Again, he said a bunch of different things about the state of AI, the markets, what's going on with AI. And we'll hear some more of his commentary, and then we will keep going from there.
How you think about, Jensen, the ultimate destination where all this is actually building toward? I don't know. There was a post from David Kahn, he's a Sequoia partner, this week saying, look, AGI is the only thing that can justify the volumes of capital spending right now, artificial general intelligence. At the same time, many of the model builders and experts are pushing out the date where that maybe is going to be achievable. Meantime, you're talking about annual generations of chips. How fast do they depreciate? We're putting all this capital in these data centers that it's just not clear, like when we get to the end, or is it just a treadmill?
We are going to have incredibly profitable and incredibly useful AIs long before AGI. Mm-hmm. And for example, right now, Cursor AI. Yeah. You know, Cursor's AI software coder is incredibly useful. All of our engineers use it. We have some 40,000 engineers. Almost every one of them are going to use it, and they're loving it. And so
they're using it instead of something else, presumably, right? So these are displacing things.
Yeah, they're not. This is a brand new thing.
Yeah.
Remember, AI, unlike previous technologies are tools that humans use. Excel is a tool that humans use. A web browser is a tool that humans use. For the very first time, we have technology that can actually use tools by itself. And so Cursor uses, Visual C++, and and now we have Gemini agents that are able to use the browser and browse for groceries or destinations or book travel for you, and it can use tools by itself. So this is really quite an extraordinary thing. This the tool industry is a few $1 trillion. Yeah. Tool user industry is $100 trillion, which is the reason why everybody's so excited about the future of technology, because it could augment labor, it can increase the productivity of labor, and here at NVIDIA, it's increased our productivity tremendously.
You've already said you wish you could have bought more OpenAI and maybe invested more in XAI at this point. That implies that you don't think that this is all redundant, because a lot of the players, I mean, if I read what Sam Altman says and the message he tries to convey, it's as if they're sprinting to try to stay ahead of everybody else because they think it's not going to be room for everybody necessarily who's trying to do something similar.
I think there's general intelligence, and I think there's specialized intelligence.
Yeah.
We love when I hire engineers, I like them to be generally intelligent, and that's a great thing. But once they come to NVIDIA, we make them highly specialized intelligent so that they could build things that NVIDIA needs. And so I think the idea of specialized intelligence versus generalized intelligence will continue to happen. And where the real value for enterprises and companies is specialized intelligence. And where the value for consumers, general intelligence.
Hey, Jensen, let's talk a little bit about capital allocation and how you see that. Just back to those same points, that you wish you had more invested in OpenAI, you wish you had more invested in these other companies that you're kind of taking stakes in, like an XAI. You can do things with your money. You can choose to put it back into R&D. You probably don't need a ton with that right now. You can choose to build the company. You can choose to make acquisitions. You can choose to give shareholders back big dividends. or you can invest it yourself in other companies. And lately, what we've seen is a lot of investing in other companies. Do you have other deals like that planned in the works?
We're always looking for great startups to invest in. One of my favorite ones was CoreWeave.
Right.
My only regret is I didn't invest
Add that to the list.
enough. Yeah. And so
Jensen's got a lot of regrets. He regrets OpenAI, regrets XAI, regrets CoreWeave. And I think even he might have not realized how big these companies would become. Maybe he didn't realize how big NVIDIA, 4 trillion. So if NVIDIA is going to be 4 trillion, a lot of these other companies are going to be worth at least, a couple $100 billion. And NVIDIA's equity portfolio could have been even more if they had really allocated heavy a couple years ago.
in all of these investments that we've made recently, we've made some really terrific investments, and largely my only regret is that we didn't invest more, because these are really special companies, and they're part of our ecosystem, building out the AI infrastructure for the world. And AI is several things. AI is energy, AI is chips, the models, and the applications. And so you could see NVIDIA, and you could look at me working across that entire stack of ecosystems around the world. And we need more energy, we need more chips, we need better models and more models, and we need a lot more applications.
So what of your cash flow that you kick off, and Mike, I knew you ran the numbers, what is it?
I was just looking at the consensus, like 240 billion in free cash flow this fiscal year and next is what is.
So that's a lot of cash that you can choose to set to work.
Mm-hmm.
Do you look for other investments within the AI infrastructure? Do you look for ways to build out extra energy? Do you look for somebody in quantum computing to get to the next thing that you could buy? What's in your brain at this point?
All of that. I'm excited about enterprise AI applications. And if I would have realized that the Cursor team was raising money before, I would have given them all my money. And so this is really terrific stuff. I'm excited about the work that Open Evidence is doing in helping digital nurses and digital with diagnosis. I'm excited about the work that Figure is doing in robotics. Wave is doing in self-driving cars. Wabi is doing in self-driving cars. And so there's just an incredibly large set of new companies that are enabled by this revolutionary technology called AI. And so these new companies are going to be future giants, and it would be great to be part of them, support their growth, and be part of that journey.
There was an analyst who was on our program earlier this week, maybe it was late last week, who said after the OpenAI deal, they wondered how long it would take for the antitrust authorities to come looking at NVIDIA. I didn't quite understand that, dug into it a little bit. Reuters has put out something just saying that as all these big giants in the AI development world kind of team up and partner, it does raise questions about whether it shuts out new entrants. What's your response to that? What do you say?
All of these deals have to be done in a way that is fair to others, doesn't foreclose markets, and is not exclusive. Yeah. And so the investment that we make in OpenAI, we don't make it a requirement that they use that investment to buy NVIDIA's technology. They could use it to do anything they like.
And maybe the AMD deal that came just on the heels of that kind of proves that out, that it is not a single partnership that works on some of these things.
There are no exclusivities. The goal is to advance the AI infrastructure, support their success, and in many of these cases, to be part of that incredible journey for us.
Jensen basically saying it seems like it's circular, but it's more so us supporting the ecosystem, making sure it's thriving. Yes, we get paid because a lot of the companies end up buying our product, but if we weren't to invest in them, then they might not have the ability to even grow as fast as we think they can grow. And because we believe in the long-term potential of AI, that's why we continue to invest. So the question for everyone is, do you buy that argument, or do you think Jensen's just saying what he has to say to make sure the party continues in regards to the entire AI ecosystem?
And it's great returns on our money, of course, but our primary goal is just really to support them and help them grow and grow the AI ecosystem.
What again, you were surprised by the AMD deal, but you look at it very differently. Do you think as a competitive structure here, this puts like any pressure on anything that comes through? What do you?
I don't think it has really anything to do with it won't affect anything that we do. I think our primary focus, our strategy number one, is to create a platform that increases performance or another way of thinking about it, reduces token generation cost by very significant margins every single year. Now, of course, that pace of innovation puts pressure on the entire industry, all of our competitors and so on. But everybody benefits when we drive the cost of tokens down every single year. Between Blackwell and Hopper, we're going to drive down the cost of tokens 10 to 20 times. And so that's Moore's law, transistors alone would have driven it down by 20%.
Yeah.
So instead of 20%, it's 20 times. And we're going to do that again and again and again every single year. We could do it because we change every single chip in the data center. We change every single technology all at once. And so my focus and the company's focus is just to keep that pace going. And when we keep that pace going, the ecosystem around us, when the token generation continues to decrease, the AIs get smarter. And when the AIs get smarter, we can use it for more applications, and we can, drive more productivity into the economy grows, everything gets better.
When the AIs do get smarter, is that going to mark a transition away from just the hyper-intensive physical capital building part of this, where hardware is the entire, the entire game in a sense, right? I mean, it's an interesting thing when I look at how the Metas and the Microsofts and the Alphabets were looked at a few years ago. Oh, they're asset light. They don't have to reinvest in their businesses. They have massive free cash flow. And now it's about actually creating physical assets that are going to be productive down the road. Do we get to a point where it's like, now we reap?
No. And the reason for that is because forever, AI is going to be about thinking. And in order to think in real time, to understand the question, understand the context, maybe go do some reading and research on the internet, that thinking process requires a computer. That's the reason why I say there's a new industry. We've created a brand new industry called AI infrastructure. And these infrastructures will be like the electricity infrastructure, the internet infrastructure, and this will be permanent infrastructure for society, every society.
All right, so we'll get back to more of the interview later. I think there's like another 20 minutes of it, but in video right here, trying to break 189. As you can see, Jensen's pretty bullish on this idea of supporting the entire ecosystem. And as a result, that's why more money continues to enter the overall ecosystem for AI. Grab got to 643. It's really teasing us with breaking through 650 and then 660, but we got to see volume about 6 million shares. Not a ton of volume today, but you do have some green at 2% excitement there. NVIDIA, that's still up 2%. Tesla, that's flat. Palantir goes red. Austin mentioned in the chat that Jensen never mentions Palantir. And I think he's right about that. I don't think I've ever heard Jensen even say Palantir. So I've never heard Jensen mention Palantir. He mentions a lot of companies, never Palantir. So I wonder what's up with that, but he's definitely never mentioned them. Robinhood right there, 146.18. That's up 1%. MicroStrategy making a move, going a little bit of the opposite direction from where it was in the morning. Then BMNR, that is green. I love how Jensen explained AI like he's talking to a fifth grader because people still don't get it. No, I do like that as well. Like every time he explains it, it's a calm, relaxed voice. That's just like, hey, this is the new world. We are pretty important in this new world. We are going to make a lot of money in this new world. And you either believe me or you don't, but this world is happening. I mean, it's very he's one of the best communicators around the overall AI thesis. But he never brings up Palantir. But every time about AI, he never mentions their name. So I've always wondered when he would mention their name. By the way, speaking of BMNR and this whole short report, our boy Chris Patel showing that he is not afraid of Kerrisdale Capital. 2,000 shares, 59.39. 2,000 shares at 59.39. He bought, I guess you could call it a little bit of a dip, if you want to call it that, from 62 to 59. So there you go. He's bullish. He's adding to the thesis. Yeah, dude, I think the Kerrisdale thing is really dumb. Really doesn't make a lot of sense to me. But I guess we got to see. Would you continue adding to Grab under 6? Yes. I'm actually secretly hoping it gets back under 6, dude. Like, I'm okay with it staying above it, but I think the problem is the last retest we had, I think I should have realized that was going to be one of the big retests. And I didn't expect it to get back to 640 too quick. I thought it would go to like 610, then come back down to 595, and then I would add more. But could it go back below 6? Of course. I I don't know. This is the second time it's going for this type of run into the mid sixes. So I don't think it easily gets, even yesterday when the Oracle news dropped, the algos took it down to 620 and then it recovered to 630 by end of day. So it's like holding above 6 is very strong, but I would add below 6. Roblox right here, 125. The Q's at 608. Microsoft, that's flat. Enphase. I don't know why people are excited about Enphase, dude. I'm seeing people get excited about Enphase. Trump does not like solar, and I know we need a lot of energy, but solar is not the solution because the administration doesn't really care about solar being the solution. They care about nuclear and they care about oil and gas. If the administration cared about solar, given the energy crisis that we're in, or the electricity crisis we're inevitably going to be in when these data centers end up scaling, by the way, fear and greed right here in neutral at 53, then I think solar would be a play. Solar is not the play, in my opinion. Like, the Trump doesn't care about it. The big beautiful bill explicitly says they don't care about it. So as much as I think Enphase is relatively bottomed, I don't know if the risk reward here is that attractive. I think there's just other energy plays that are a bit more interesting. Yeah, Hood is not pumping. For whoever said Hood is pumping, dude, the word pump and dump, like these words, like, you know, you get a 50-cent move on a stock, it's dumping to the downside or pumping to the upside. It's not a pump. I mean, yes, Hood is at up 1.3%. That's nice, but I wouldn't call that a pump. But dude, I mean, like, the thing about Hood is it's holding the 140s, bro. Like, this stock was 120 last week, and it is hopefully normalizing that we haven't been below 140 since then. So I can't say I'm upset. We can stay here and just normalize these levels. I would be very, very, very happy. Dude, again, like, given the run in ASTS, Rocket Lab, and AMD, I think a lot of people's year-to-dates have changed. And I think now we're getting to the point where we got 3 months left of the year, less than 3 months. You just want to protect those gains. Like, you don't want to take unnecessary risk. You don't want to bottom fish just for the hell of it. You don't want to, you know, get into some random name and then screw up your entire year-to-date because that name just doesn't work out or it becomes dead money. Then you have to tax loss harvest when you didn't need to. Like, I think now's the time to be a little bit more careful. You buy dips on the names you really love. Maybe buy into strength for some of those names you love. And if you put a new name in the port, I think it's got to be a compelling opportunity. Not just like, oh, you saw a tweet about it and therefore you're excited. Which is what I did a lot. Yesterday on Technical Analysis, Technical Tuesday, the amount of small cap tickers, micro cap tickers, OTC tickers that Jason and I got in the chat, not going to lie, it was a little concerning. It's like the amount of people that are asking for these names. And it's not to say those names are bad companies. It's not to say that you shouldn't be thinking of those tickers, but just the sheer abundance of new names that we had never seen before. Obviously, because people are excited to allocate capital into random OTC stocks and they want some TA on it. It definitely tells me that there's a lot of excitement. And now, again, the reason I don't think that's a top is because if all those names fail, who cares, right? Like, if all these random stocks go to zero, it's like it does not really affect the stock market. It doesn't take down Nvidia, but it does mean some people, you know, might get wiped out in certain names, or they might make a lot of money in certain names. But the question is, do you want to take that risk? Do you really want to take that risk? I think everyone has to think about that getting into the end of the year. Those are trades, not investments. That's fair. And I mean, if you're trading it, that's fine. But obviously, you're hoping for the stock to go higher. So you got to be right, at least in the direction of the trade to make some money. Would you add BMNR? I would wait. I would wait to the low 50s if we get it. Look, if you have no exposure, I mean, eventually you're going to have to DCA, right? So, like, if you have absolutely no exposure and you believe in the thesis, then yeah. I mean, I probably would add here and just, you know, if it gets down to 55, it would be my next DCA and then keep going from there. But at the end of the day, Bitmine can fall. Robinhood could fall. Palantir, you know, all these names at trading at these all-time highs, they could take it. Grab could get back below 6. It's basically at 52-week highs, right? So I think it's just when you're buying into these names, you really got to ask yourself, are you okay with buying the dip? That's why I'm not touching ASTS or Rocket Lab today, because if I buy ASTS at 80, which by the way has lost a decent chunk, I mean, it was at 91, still up 7% of the day. But I mean, for the sucker that bought it at 91.41, I mean, like, a little bit of a sucker right now. You're down $11 on the stock. Now, maybe in 10 years, you'll be fine. But like on a day like this, you probably feel annoyed that you bought it at 91. And the question is, did you need to buy it at 91? Right? Whoever was buying this at 91 today, did you have to buy into that much strength? And if you didn't, and if it was pure FOMO, then it's like you got no one else to blame. That's it. And I think towards the end of the year, we could make, you know, a little bit smarter decisions when it comes to a lot of this stuff. Would you try to sell your positions if the market crashes? Or would you just dollar cost average? That is a great question. It all depends on time frame, right? Like given my age, if Hood crashes back down to like 70, 60, 50, whatever, if something happens, I would try to find as much money as possible to buy more. Now, if I need to sell some parts of my position to finance life or taxes or whatever, then it is what it is. But at its core, no, if the market crashes, like if you're in these names, and that's the best litmus test for if you care about a stock. If Palantir crashed, would I be happy that it crashed? No. Would I be excited? Like I was pretty excited last week when it fell 9%. I didn't even blink. I bought 100 shares and I was like, all right, we don't get 10% dips that easily on Palantir. So I bought. So, and I think that proves if you're bullish or not, like really bullish or not on a name. But no, if the market crashes, the market crashes. You got to ask yourself, do you want to be in these names or not long term? And I think that's what retail did good this year, right? Like DeepSeek allowed me to get an NVIDIA position, allowed a lot of people to get into NVIDIA. And then the Liberation Day just got a lot of people to buy anything and, get some more exposure. So I think retail did a great job buying the dip. And now it's just a question of maintaining that momentum. And as a result, you can see this from this chart right here. The value of equities held by the bottom 50% of household net worth has now surpassed 500 billion for the first time. So again, the bottom 50% of household net worth in America, this is a chart from 1990 to 2025, now owns about 500 billion. This number was 100 billion in 2020. So now on a per household basis, that only amounts to $8,150 per household. But still, you do have a quintupling of the amount of assets for the bottom 50%. The bottom 50% of households also own just 1% of U.S. equities. So it's a small figure that is rapidly growing over the past 5 years, but it's more and more people that are jumping into the equity markets and continuing to allocate capital. Retail is great at buying the dip, but we're terrible at selling tops. How can we be better at that? What are strategies we can practice? So it's not retail is terrible at selling tops. Everyone is horrible at selling tops. Like people are not good. And the biggest institutional money managers in the world are horrible at selling a top because it's really hard to figure out when it's a top. I think the way to navigate that is that, if you have 1,000 shares of Rocket Lab that you bought at $20 and you say, hey, at this specific level, I will sell 10% or 100 shares of my Rocket Lab, then you have that predefined. It becomes non-emotional. The punchline is when you become less emotional about your buys and sells, it becomes very easy to just navigate a position. Which is what I did on AppLovin, right? I bought it at 578, sold it at 600. I don't really care that I went to 623. I'm like, dude, I'm emotional. I'm not emotional about this. I just wanted to do a little bit of a swing. It's not a big position for me. I don't care. I made $1,000. I'm happy. I move on. And I sleep like a baby. So I definitely didn't sell the top of that. I don't know if 622 is the top. I definitely missed out on $22 a share, but it is what it is, right? There's no emotions attached to it. So Peter Thiel understands how to sell very well. He is an expert at selling, and he doesn't. I mean, he sold $1 billion of Palantir at $36, bro. Palantir went on to go to 180. So it's like if you had just held on, that billion would be worth 8 billion or 7 billion. So it's quite incredible. But I think eventually you have to be okay with taking profits at a predetermined rate. Also, a profit is a win. A profit is a win. So when I sold AppLovin yesterday, I made $1,000. Yeah, I could have made like $1,500, but $1,000, $1,000, dude. I pressed 2 buttons to make $1,000. I feel like as investors, we have to remember that that is not normal, bro. To make $1,000 in the real world, you got to put in some work. We're over here pressing a couple buttons on a screen because some short report comes out, a stock goes down, you buy the dip, okay, then you take some profits. Like that is not a normal way to make money. And I think gratitude is also really important when it comes to taking profits. Batty, thank you for the $200 super chat. F the BMNR short report. I'm buying 200K worth again right now. Bye, Carousel. Have fun under the bridge with Citron Research. I love Batty. I love her so much. Batty, how many shares do you have now? Is it above 50,000? I think she is the biggest BMNR whale in our chat, bro. By the way, Citron, I wanted to respond to them today. They said, hey, we objectively were the first people to call ASTS. Look at what they tweeted today. Always fun to be the first. And they put a ChatGPT screenshot of Citron Research was the first to publicly discover ASTS. And I just want to respond. I want to be like, wait a second. So Palantir, that has revenues and profitability, is overvalued, but ASTS at 35 billion, you're saying is no issue. And second question I want to ask is, can we get an update on the Palantir short? Because, okay, you can take your win on ASTS, but like, what's going on with Palantir? It's at the same exact price that you guys shorted it at, saying it was going to $40. So just like Citron, Carousel, all these guys that try to tout their short holdings, I mean, when you don't get an update from them, it's almost like they forgot that they even shorted in the first place. But nonetheless, that BMNR short report, not working. Wow, 65,000 shares. Someone's bullish. Now, she is selling a lot of covered calls on this. I've talked to her about her strategy, so she's making a lot of premium. Let's just do some math on this real quick. Let's just do some basic math. Okay, so 65,000 shares. I'm going to assume the average is probably not 58, but I'm going to assume the average is 58. So if we assume the average is 58, she put in 3.7 million. If she wanted to sell covered calls, we're going to go out of the money. We're going to go 1 month out. We're going to go to November 7th, and we're going to say BMNR will not hit 75. Is that reasonable? Is that $75? Is that reasonable to say that it won't hit 75 in a month? So that means we can sell 650 contracts because of 65,000 shares. It's paying you $3.55 a share, which means on a portfolio of 3.7 million in BMNR, she can make 23,000 in a month. And if it does go to 75 minus 58, 17 times 65,000, she would make a profit of 1.1 million on top of the 23,000 of premium. And that's assuming 75. If she were to do something like, 65 or something, it'd be way higher. So, and that is the benefit of covered calls, right? If you're using it as an income strategy and you acquire a ton of stock, and that stock, you're able to just sell premium against it. Now, if BMNR goes to 100, she would, someone would be pretty upset because you have to sell at 75. So there's the give and takes of it, but that is definitely a strategy that can produce a ton of income. SoFi right there, trying to recover back above 28. Google also going green. There you go, 245. And then Grab still at 645. Still at 645 or 642 on Grab. I'm doing 75 for next week. And who knows, dude, if ETH goes vertical, that could happen. Oh, she says I have no calls on BMNR right now. I have BMNU and I sell calls and puts on that. She has 30,000 shares of BMNU. Oh my goodness, Batty. BMNU is the leveraged BMNR. Okay, so she's selling calls on the 2x leverage. That means the premiums have to be even better because the volatility is even stronger. But no calls on the actual. By the way, if you guys have looked at the new update to the Robinhood app, I don't know if people have, but take a look at this. I love it, dude. If you go to the search tab, look at that. It gives you an overview of the market, top movers, crypto movers, and then it gives you an earnings calendar. I've been waiting for an earnings calendar for so long, but there is your earnings calendar. So you can get the beat on the EPS and revenue right there, and it tells you the exact date of it. So I don't know if people got the update, but it's really nice on the search tab. And that's starting to also get a lot better. NVIDIA right there, 188.86. And then AMD, 220. Square introduces Square Bitcoin Merchant Integrated Bitcoin Payments and wallet solution, which enables sellers to accept Bitcoin payments with zero processing fee. Okay, Square has been the laggard this year compared to some of the other crypto names. Wow, Square's down 7%. Dude, everything they've done with Bitcoin has not got the market excited. It's just not got the market excited, but that one is green. You can create a screener out of the earnings calendar. Wow, I didn't even know that. I got it yesterday. So that was a good update. Where's your case, bro? I don't know. I think it's my natural tendency to not have a case. I already scratched the crap out of this phone, bro. It fell the other day. You're probably not gonna be able to see it because it's too bright, but it has like 5 scratches all over it. Just like, whatever, dude. I guess my phone's always gonna have scratches. I guess that's what we're doing. UNH, is that moving? Wow, 372. UNH coming back. Grab 643. Google 245. Getting some good excitement on the UNHs of the world. Beginning to make A broader move. Micron upgraded to 225 from UBS. Saudi government said in talks with banks for a $10 billion loan. Why is the Saudi government trying to get a $10 billion loan? Don't they have all the money? That's weird. Why? That's a weird headline. Saudi government in talks with banks for a $10 billion loan. Okay. Another headline we got: 17% of Americans say they're delaying a major purchase like a home or a car because of the government shutdown. 7% have canceled plans. 65% say their plans are unchanged. Okay. So the good thing is the majority are saying no impact because the government shutdown, but you are seeing a delay on some major purchases because of a shutdown. Hopefully that shutdown is over before the 15th when people need to get paid. But we're going to see. Omer says, Amit, I'm pretty close to my next milestone. Thank you for the chat, for guiding and supporting me along the way. Omer, congratulations. I know a lot of people are hitting these milestones. It's pretty incredible to see. A lot of people probably hit it with RKLB and ASTS today. So super, super awesome to see. Is anyone in CRISPR up 34% in a month? I think CRISPR and the whole genomics thesis is very real. I have not done enough due diligence to be heavily allocated to it. I do think ARKG is probably the best way to get allocation. ARKG is up 4% today. But I do think AI is going to be a really big accelerant for genomics. I mean, it seems inevitable that if you just need more and more data to be able to come up with discoveries, that entire space is about mixing and interlocking different pieces of data to find not only the next drug, but the next therapeutic way to combine different drugs and genomes. And so I do believe in the thesis, just not allocated in a specific name on that. And then Rocket Lab still moving up 8%, 8.7%. That is also green. Nick said, I canceled my vacation because of the economy. Yeah, I mean, look, I've been seeing, I think I've been showing you guys a lot more charts about delinquencies, particularly on three things: student loans, credit card loans, and then auto loans. And so those three things are the three things so far that we're seeing a lot more delinquencies on. Rates coming down helps. Government shutdown doesn't help, but we're going to have to keep up with that data to make sure it does not become too aggressive. And I think that's the biggest thing the Fed is looking at as well. We don't have any macro data today. Oh, Poland cut their rates to 4.5%. Apparently this was unexpected. They cut rates by 25 basis points. Markets had expected a pause. Poland stock market ETF. So you got more central banks cutting their rate. EPOL. EPOL is the name of it. That is flat on the day. EPOL year to date is, wow, Poland's up 55%. Goodness, bro. Dude, okay, hold on. We need to make a watch list. We need to make a watch list of international. I want all the international ETFs. We need to look at this every day so that we can keep track of this. So we'll obviously do SPY. That's America. Then we'll do EPOL. That's Poland. And then what are the other ones? What is Europe? What is Germany? Do we know why Arista's up? How much is Arista up by? ANET. I feel like it's 5%. I feel like it's pumping because of NVIDIA. I feel like a lot of the names are pumping. I'll see if there's an upgrade or not. Arista. Citi is bullish on it. No price target, at least not that I see. I think it's a Citi report. I think that would be the main reason. At least that's what I see. KWeb. Okay, so that's China. Cool. What else do we have? AEX. That is, oh no, that's, I don't see that as an ETF. TSX. That's Taiwan, right? No. Some of these might not be available here. Usually BlackRock has most of them. India, MSCI. MSCI, well, MSCI is the whole, where MSCI, EWJ is Japan, EWZ is Brazil. Yeah, most of these we can just use from the BlackRock one. India, INDA, that's India. Europe is, we can do IEUR, VGK, that's probably another one we can look at. EWT is Taiwan. Okay. So there you go. IBX is Spain. Because I do think it's important to look at a lot of these every day. Like, who would have thought Poland's up 55% this year? EWG is Germany. Dude, Germany should be up at least 30% because the Rhine metals of the world. Yeah, 34%. The defense contractors in Germany in January did great. RGT has been slacking a bit because of what's been going on with Malay, but that was doing very well. Well, it was down 20% for the year now. ARGT, we'll add that. Yeah, Europe's everything's outperforming the US this year, outside of Argentina. I mean, most of Israel's doing great this year. Greece is 70%. STI is Singapore. Okay, I don't have that there. I'll try to get all the BlackRock ones tonight because some of these we don't have their tickers, but we'll take a look at this every day. And then we got Canada. How is Canada doing? How are our neighbors doing? Canada, year to date, 27%. They are beating the United States. By the way, Trump and Carney were talking yesterday. For those that saw, the ending of it was a little. And let me pull up to that right there, and we can finish that part.
From Somalia, he said, "Would you like to take her back?" He said, "No, it'll be substantial, and a lot of those jobs will never come back. But you're gonna have a lot closer to a balanced budget, actually."
Is there anything the Prime Minister has done that's making it more difficult to reach a deal?
Say it.
Is there anything that the Prime Minister has done that's making it more difficult or easier to reach a deal?
No, I think he's a great prime minister. I mean, he could represent me anytime. I will tell you, I'm not saying that because no, he is a very strong, very good leader. He's a nice man, but he can be nasty. He can be very nasty. Maybe as nasty as anybody.
How?
I think Canada. Let me put it this way. I can tell you this because I deal with lots of leaders all over the world. He is a world-class leader. He's a man that knows what he wants. And I'm not surprised to see that he won the election and won it substantially. And I would think he's more popular now. He's a good man. He does a great job, and he's a tough negotiator.
So then what's holding things up? If he's a great man and you want to do a deal with Canada, why aren't you?
Because I want to be a great man too. Thank you very much. Thank you.
It was a very amicable meeting with these guys. Like, I mean, they were laughing, they were talking. I think I listened to like 20 minutes of it just in the background, and like they were praising each other. They were happy. Trump was making jokes. Carney was making jokes. I mean, it was not like the time they met a couple months ago, where it was just like a bit more of a serious tone when they were in the midst of the trade war, and they're still in the midst of a trade war. But it didn't feel as aggressive. It felt like whatever deal Trump eventually is going to get with Canada will be favorable to both sides. And so, I don't know, the vibe was decent yesterday. And hopefully if we just have more and more deals like that with some of these other nations, we're still waiting on the India deal. And that would be very important. Robinhood right there, 147.48, trying to go back to 148. And then NVIDIA, 188.57 is what you got. Someone said Peru is up 50% this year. Goodness, bro. Peru, 58%. Some of these countries they are blowing away the United States. Absolutely blowing away the United States. It's quite incredible to see this. I want to look at a lot more of the performance of some of these countries internationally. I mean, obviously, we're focused on the United States because we have a lot of countries here, or a lot of companies here, but it is pretty wild to see the rest of the world outperform as well as they've done. And that's a good thing. If America goes up 15% and other countries go up 40, 50%, it's good to see that diversifying. Amazon, a little bit of a breakout right here, 224. 224. It hasn't touched 224 in a while. So it's nice to see Amazon kind of break above 220. India is down 1% this year. It was up a little bit more, but now it's down. Yeah, look, obviously the United States is outperforming over the past couple of years, and the United States also has the best companies in the world from a tech perspective. But you don't want to see the United States be isolated as the only country that's performing. I mean, it's a global economy, right? We need to make sure every single country has an active investor base and there's liquidity in their markets. So that is good to see. The stock draft website is 2025stockdraft.com. As you can see, Matt running away with it, 48%. I'm at 40. Tanner's at 24. Chris at 12.6, and then Steve at 9.1. All right, let's finish up with Jensen, and then we'll keep going from there.
And so this is a transformative time. And the way we deliver computers in the future, the way we deliver intelligence and produce intelligence is fundamentally different. The thing that you mentioned, which is really interesting, is when you look across the stack, when I said earlier, AI is energy, it's chips, it's infrastructure, it's AI models, and it's AI application. And in just one conversation, we've already identified that energy industry is growing. The chips industry, for example, us, we're growing. Infrastructure, Azure, OCI, AWS, CoreWeave, Nebius, these incredible companies, they're growing. AI models, OpenAI, Anthropic, X, they're growing. And on top of that, AI applications, Cursor, OpenEvidence, isn't that right? We're literally seeing a complete revolution across that entire stack and opportunities across it. And to the extent that we have the financial capacity to do so and to be part of this entire stack, we're going to participate across that entire stack.
Jensen, you're not only looking at technological advances and thinking about how to do that, how to build this infrastructure, you have to be thinking about risks all the time too.
Yeah.
What's at the top of your list in terms of risk assessments when you're looking at these things that pose a risk, pose a threat to the growth that you're talking about?
Well, there's a lot of technology risk, and there's a lot of product design risk. There's a lot of those kind of things, but those kind of things are things we're good at.
Yeah.
Fundamentally, our company is good at building technology and building products. And so we're good at those things, and we're continue to be careful and thoughtful about doing those things. The things that are hard for us, that are new for us, is geopolitical risk.
Yeah.
And it's out of our control. And
so Jensen basically saying, we don't have that much risk when it comes to the technology because we're pretty good at that. But geopolitics, there's not much we can do.
And the best thing that we could do is just inform policymakers and governments about the nature of AI, why it's different than previous technologies, to be accessible to them, to be informative to them, and then help them shape policies that are in the best interest of the world, the best interest of the countries.
So how far ahead of China do you think we are in terms of AI development at this point? How close?
Depending on which layer of the stack, but overall, I would say we're not far ahead. If you look at the entire stack, they're way ahead on energy. I am so happy that President Trump leaned into pro-growth, pro-energy growth, so that an entire industry above it could grow. If you could just imagine, without President Trump's pro-energy policy, that entire layer above the energy would have been constrained. China's well ahead of us on energy. We are way ahead on chips. They're right there on infrastructure. They're right there on AI models. Our models are better overall. OpenAI's is better, Anthropic's is better, Gemini's better. However, their open source models are well ahead of us. And then on the application layer, we have to be quite mindful because their applications are very fast moving. Their society is very quick in adopting new technology. They're under-regulated they don't regulate heavily at the industrial level. And so the applications in China are advancing incredibly fast. This is an area that I'm quite concerned about. I hope that American companies and American society are going to be fast in adopting AI applications, because ultimately this industrial revolution wins at the AI application layer, at the diffusion layer.
There was an analyst just this week who said that he's anticipating China will get NVIDIA's Blackwell chips by as early as next year. Do you think that's the case? If we are way ahead of them in chips, what should our strategy be? To give them better chips, or risk having them build their own chips that are better? But if we hold the advantage here, how do we as Americans think about this?
That's right. This is where a nuanced strategy is necessary. And we have to take a step back. President Trump had a AI Action Plan Day. And that AI Action Plan Day, he was very clear, and is a very thoughtful and very America win around the world strategy. Ultimately, he wants America to win the AI race. So the question, when you take a step back and ask yourself, what does that mean? At the chip level, you want to have the most advanced chips. We want to make sure that United States and American allies have the most advanced access to the most advanced AI chips. On the other hand, in order to win the AI race, you need to have all of the world's AI developers to be building on your platform. Just as we would, if you're an app store, you would like all of the apps to run on your app store. If you're an operating system, you would like all the world's applications to run on your operating system. If you were a chip, an American tech stack, you want all of the world's AI developers to developing on your American tech stack. That's true whether we're here in the United States or whether it's developers in China.
But
So this
from a defense
nuance,
perspective, we don't want them having the chips that are as great as we are, because we don't want them having access to that, particularly when it comes to the military.
no government, surely Chinese government, is going to be building their defense on Western technology. Nor does the Pentagon use Chinese chips to build our national security. And so they have plenty of chips themselves. Don't forget that this is a country not without any chips. They have Huawei. They have really, really sophisticated and really entrepreneurial startups building AI chips. They're manufacturing lots of chips. And so the fact of the matter is their military has plenty of access to their own chips. What we need to do is find a nuanced strategy that allows the United States to stay ahead, but for American tech stacks to be used all over the world so that the world builds on the American standard.
Are we on the way to being that global standard? I mean, you keep hearing about sovereign AI, and it seems as if there are these interests in creating parallel kind of AI ecosystems.
If we don't win around the world, someone else, if we preclude other people from building on the American tech stack, they'll have to use some other stack. I think David Sachs had a really simple KPI. He said, in 5 years' time, if the American tech stack is 80% of the world, then we are doing a good job winning the AI race. If the United States is 20% of the world, then we've lost the AI race. Now, one of the things that's really important is that developers are all over the world. 50% of the world's AI researchers are in China. China is 30% of the technology industry, technology market. The Chinese market is large. They've got 1 billion users. And so it's not a market that you could easily decide to walk away from if your ultimate goal is for America to win the AI race. Giving up 30% of the world's market right from the get-go, and then not allowing American technologies to diffuse and be proliferated around the world, we are essentially isolating American technology into America and forfeiting and conceding the rest of the world to everybody else. And I think President Trump would say that that would be not a condition for America to win the AI race. And so we have to find a nuanced strategy that allows America to have the best technology, earliest technology, but also to win AI developers around the world and win AI markets around the world.
I think you.
All right. That's pretty much what Mr. Jensen had to say today. And continuing to say that America needs to be the tech stack the world builds on. I actually do believe in that argument. I mean, I think there is a national security concern, but you don't want China developing this type of technology, so you might as well have them build on America's tech. And, that helps shareholders of every semiconductor company, especially NVIDIA and AMD. So NVIDIA right here, trying to go for that all-time high, 188.64, but all the semis getting a bit of a pump today as they're moving. How's gold doing? Is that still green? Gold trying to, it didn't hit 4,100 yet, but it's trying to get there. Silver did hit above all-time high today, which was pretty incredible. You're right. He never talks about Palantir. So he doesn't talk about Palantir, but he did say, if anyone noticed, that the value will be in the application layer and the diffusion of those applications, which to me is screaming Palantir, AKA the models. Like, dude, I don't want to say the models are commoditized, but the models are essentially commodities because you have so many people building them. Now, the powerful use cases of the model will make them less commoditized, or less, it will make their business models less commoditized, because if OpenAI is the best model, then they should be able to get the most users and then monetize the users. But the way they monetize the users is through the application of the model, not the model itself. And with Palantir, they're connecting the model in the enterprise, AKA the use case or application of the model is where all the revenue, all the outcomes exist. So when he talks about use cases and proliferation of applications, I think that's Palantir. And eventually a lot of these model companies will want to come up with applications either for the enterprise or the consumer that will continue to do well. Palantir right there, flat on the day, or actually down 181. Nvidia's up. UNH and CRM not doing too bad. UNH 373. Haven't seen these levels in a while. CRM 240. It was at 236. Last time UNH was 373. May 8th. May 8th. It's been almost 3 months since UNH got to these levels. Someone said, can you do a poll of how many full-time traders we have? Yeah, that's a good question. We've never asked that before. I would say it's less than 10% of you that are full-time traders, but are you a full-time trader? Again, a few of you have reached out to me. I told you guys I met a guy in Canada who he called me the other day just to catch up. Dude's doing 20 to 25,000 a day, USD, not Canadian dollars, in trading, just day trading. I mean, it's quite incredible. It really is quite incredible. And you know, he uses the stream a lot of time to catch updates and make trades immediately. So I would say it's less than 10% of you, but it is very lucrative if you can do it correctly. If you can't, then it's kind of hard. But it is fun. Wow, 30% of you. I expected way less than 30%. 30%. Dude, I did a couple of day trades like 2 weeks ago on Grab, and I made $300 one day, and then I made $150 the other day. Dude, I felt like a rock star, bro, because it's addicting. Like, you buy it low, you sell it high, and you make money, and it's like, dude, this is awesome. But to do it every day, and I did it after the market opens, so I did like 12 p.m., which is not the time to day trade. The time to day trade is from 9:30 to 10. That's when 80% of the volume in the stock market happens during those 30 minutes. And then, you know, the other 10, 20% comes during power hour from 3 to 4. But like, middle of the day is like usually not at least this is what I've heard. Maybe I'm wrong, but what I've heard is day trading is market opens. That's when you got to get in long or short on whatever your name you're trading. But it is fun. Because like, you buy low, sell high. Yeah, it feels good to be right. It feels great to be right. I don't think it's gambling, bro. I don't think it's gambling. I do think there's like there's pattern recognition, there's technical analysis, there's fundamental headlines. You know, if you're doing it on names that you want to hold anyway, that even if you were left holding a little bit of a bag, you're not that upset because it's a name you want to hold. But it's not easy. It's not like selling options is way easier than now. Selling options takes more collateral, right? Because you have to either buy a lot of shares or put up a lot of premium in selling puts. But day trading is harder. It's just way more like lucrative to an extent because you can be in and out within 5 minutes and make thousands and thousands of dollars, especially if you're playing with a decent amount of money. But you got to be right, and it's hard to be right when it comes to day trading. Steve says, I'm retired, spend 30 hours a week minimum on my investments trading. Yeah, it's incredible. For those that really dedicate the time to it. You know, there's some people that say day trading is a myth. It's not possible. I disagree with that. Like, for the majority of people that aren't willing to spend the time, yes. But like, it's not like it's impossible. I mean, plenty of people have done it, but they've really dedicated a lot of time to do it. Now, if someone's selling you a course on how to do it and all that stuff, that person's probably making more money from the course than actually doing it. But the real day traders I know, they don't even care about building a social media brand. All they're doing is like, they're playing with big money and they're getting in and out of names as quick as they can. And hopefully they're in the right direction. And, you know, it does well. But for the majority of people, it is not easy to do, including myself. And I've done it a couple times, but not in any sophisticated way. Yeah, it's better odds than Vegas, I would say. A little bit better odds than Vegas. And then you got people doing perpetual futures contracts going 20, 30x long on freaking Bitcoin and Ethereum. I mean, those people, I don't know how they do it. I really don't. Like I mean, just that shit's scary, bro. That I don't think I could do. But there are people that are out there and do it. Vin, thank you for becoming a channel member. Appreciate you being here. Vin, I met him in California. He's an awesome guy. So Vin, thank you so much for being here. Scott, thank you for the $20 super chat. You're the man to make. Keep on. Please never stop. Scott, love you, man. Thank you for being here. It's been a while since we've seen each other. So hopefully the new job is working out and hopefully we get to see each other soon. Again, I will just say this for the people that missed it. I will not be here tomorrow. I'll be getting a root canal tomorrow at 8 a.m. So unfortunately, I will not be here. Likely, I mean, we'll see how my mouth feels, but probably going to miss the market close as well. But we will be back on Friday as well. Amit, Hims is under the radar, almost 60 with 37% short interest and over $1 billion in cash. One big announcement acquisition can cause a squeeze. I agree with you, and their growth is amazing. I have my Hims. I haven't added to it. I haven't sold it. But I do agree. I think Hims is cheap. It's just the momentum after the Novo lawsuit kind of died down, and people just don't care about it that much anymore. But I definitely don't think it's a I don't think it's a meme, bro. You know, I think Hims is a legit company. It's still up 100% year to date, though. I know some people thought it was going to go to 100 this year, and maybe it does, but you know, it's had a really good year, and I think long term it's not going to be horrible. Batty says I started day and swing trading early 2025, then just realizing selling calls is better. Yeah, I mean, selling calls is because even if you lose when you're selling calls, the worst situation outside of the stock tanking, which is inevitable, even if you're day trading, is you miss out on opportunity cost. And that's why I like it, because it's like, look, even if I miss out, I still make money. Whereas day trading, if I'm wrong in the direction and I don't have a tight stop loss, I'm down a lot of money. And I better think that the stock's going to come back eventually, because if not, then I'm bag holding. And so I think that's the most important thing. Mutsini says, Amit, I need a humble perspective from you. If you were to start over today with, say, 20,000, where would you start from? I think that's a great question. I would love to chat to participate in this question. If you were starting from scratch today and had $20,000, how would you navigate the portfolio? Amcor could be SMCI of 2023. Dude, this is a exciting name. AMKR up 1.23%. The Alaska stuff really got the street to be excited about it. So yeah, this one had a little bit of a breakout 2 days ago, and I definitely think it's worth taking a look at. By the way, Stock Talk, who is an account on Twitter, I'm starting a show with him on Wednesdays, which is today, 12:30 to 1. It'll be a Twitter Spaces. So I'll link his Twitter right in here in the chat. And he is actually one of the first people on Twitter to call out Amcor. I didn't look too deep into it, but he was one of the first names that called it out like a month ago. And his whole thesis was rare earth minerals would be the play. So if you want some audio content, 12:30 to 1. The premise of the show is just going to be 2 to 3 tickers a week and talking about some new names. That's it. So we're not going to be talking macro, not going to be talking JPOW, not going to be talking NVIDIA. We're going to pick 2 to 3 tickers that are new. He is a wealth of information of a bunch of different new stocks. And we're just going to talk some alpha and see if there's any possibility in some new names that are out there. So 12:30 to 1 Eastern every Wednesday. We'll be doing that show. Okay, what do we think? 20K, if you have a new account, what would you do? 20K full port BMNR. Okay, although that's funny, I mean, to be honest, that is the answer. Not specifically BMNR, but the answer is, like, dude, at 20K, I feel like you got to pick a name and hope you're right. Right? I like you can either go I'm going to put 1,000 in 20 names, or 5,000 in 4 names, or I'm going to put 20,000 in the S&P. But again, it's such a nuanced question, because if you're looking for real growth, you got to solidify versus diversify when you're that. I mean, that's what I did with Palantir, right? Like when I was starting out, it was just all Palantir. And, you know, hopefully we ended up being right, but like that's it. I really do think to go from 0 to 1 on a portfolio quicker than normal, you got to pick one name and be right about it. Now that's more risky, because what if it doesn't work? Which it didn't. Before Palantir, there was another stock that started with a P and that blew up my whole account. The first 25K was gone. So it's like, most people will mess up on the first one, I think, just like mathematically speaking, but if you can get the next one right, I think it matters. So yeah, I would say, I mean, if it's not really growing it, you have to pick one name and be right about it, or at least 2, right? And go 10K each. If not, then you kind of just grow it slow and steady. Obviously, the sort of cliche answer is if you have 20K, the most important thing is to increase your income. And, you know, I know people don't like to hear that, but that's true. Like that's what everyone has to do when you're starting out there. But if it's purely about the portfolio, then I think it's a couple names and try to solidify into them. And it's very possible, dude. This bull market has shown if you went all in on BMNR at 40, or all in on Rocket Lab at 20, or all in on Hood at 30. I mean, so many screenshots I see every day of people. I mean, people on Iran. Dude, there's this screenshot on Iran. Have you guys seen this shit? Someone went all in on calls on Iran when it was like $10. And it's just like, you know, when you make those types of moves, I mean, things can increase. Yeah, look at this person, bro. 390 calls for Iran 25, 360 calls for Iran $20 expiring in a month, 3 months. They're up 11,000% and 10,000%. Now, if you chase this stuff, you're more likely or not to end up losing because A, call options are hard to get right. And then B, you got to be right on the stock and you got to be right about the strike price and you got to be right on the timing. So I wouldn't suggest the YOLO the 20K into some call options, but it is possible. You just got to really figure out if you can nail some of those. All in grab, dude. Well, you know, speaking of 20K, I did that with my solo 401k as of 2 days ago. I put $23,500, which is the most I'm allowed to contribute as an employer. And then I think you contribute another 50,000 as an employee. You have to kind of look up based on your income with the solo 401k, which is a tax write-off. If you're an entrepreneur, I really do think a solo 401k is something to look into. I put it all in grab at like 610 is my average. So those shares I'm not even thinking about. It'll just be stuck there for a while. I started with 15K a year ago, now approaching 100K. I diversified into about 6 stocks and took all profits. Incredible. Absolutely incredible. 20K all into meme. Dude, I still can't believe they launched this shit. 450,000 shares of volume. Round Hill meme stock ETF. Goodness, bro. That is wild. Absolutely freaking wild. UNH, that one's still doing well. Breaking through. Wow, 374. Folks, it hasn't seen these levels in 5 months. It's a big day for UNH. It's a big day in UNH. Half of it needs to be in undervalued Max 7 stocks. Yeah, I mean, the NASDAQ Max 7, that's also not crazy to be able to invest in those. It's also not crazy to be in those, especially like the Amazon's world that have barely moved. I dumped my entire Roth into Hood at 17. Because I was even more degen. I did calls on Hood when my Roth at freaking 10, and I just didn't hold on to them. If I'd held on, it would have been worth so much. But I didn't hold on. We got Sam in the chat. He says, I'm telling you, bro, 7,500 S&P 500. Let's do a poll on that. I don't know, Sam. I disagree. I mean, I hope you're right. 7,500 S&P end of year. I just think it's aggressive, bro. I think 7,000 I'd be grateful for. But if we get 75, be pretty incredible. We got an update on mortgage rates. Let me pull that up. And then we'll keep going from there.
Adjustable rate mortgages. Our Diana Olick is here with that story. Morning, Diana.
Good morning, Carl. Yeah, mortgage demand fell again last week, even as interest rates eased slightly. The average rate on the 30-year fix dropped to 6.43% from 6.46%, and that's for loans with 20% down or conforming loans. Applications to refinance fell 8% for the week, and applications for a mortgage to buy a home fell 1%. All of this according to the Mortgage Bankers Association. Now, interesting in this report, the share of applications for adjustable rate loans rose to 9.5% from just above 8% the week before. Now, the average rate for a 5-year ARM fell to 5.49% from 5.74%. So it is a considerable savings from the 30-year fix. This also happened in mid-September when the 30-year fix dropped sharply from where it was, but only to 6.39%. So not that far from where we are now. Still, back then, ARM demand jumped to nearly 13% of all applications, the highest share since 2008. So clearly, current borrowers and buyers are looking for savings wherever they can get it, given still high home prices. Important to note, though, ARMs can be fixed for up to 10 years, and today's ARMs are underwritten much more strictly than the ones that led up to the subprime mortgage crash. Still, there is, of course, some risk because these loans will eventually adjust to the market rate, which could be higher. Of course, it could also be lower. Back to you guys.
We mentioned earlier this morning this RenMac data point today, looking at purchase applications, Diana. You look out over the last 6 months, they're down 2.4 annualized. The market it's not quite enough, is it?
No, and it's all about affordability. Look, home prices just haven't given way yet. They've eased a little bit slightly. And, supply is actually, we thought it was coming up, but then sellers started delisting and taking homes off the market. So there's still not enough supply to bring those prices back down markedly. And so it's just a hands down affordability issue.
Okay, Diana, as you've been covering. Thank you, Diana Olick. After the break, gold's rise above 4,000.
All right. So, you got interest rates that continue to, mortgage rates that continue to come down a little bit. It's not as aggressive as like some people would want it. By the way, where's Open Door? Open Door, that's flat on the day. But at least it's coming down from 6.5 to 6.3, which is like good enough, at least for some people to get excited. UNH, I think that and Rocket Lab and ASTS are the stories of the day. UNH breaking through 370 is very, very bullish. AST holding on to the 80s. It's not 91, but it's still 80. And then Rocket Lab 65. Rocket Lab, we are holding on to 65. So not too bad to see at least those names holding on. Is that it? I think we are done for the day, guys. Sato, thank you for becoming a channel member. Lisa Cole, thank you as well for becoming a channel member. Appreciate you being here. Nathan, thanks for the super chat. Have you done any DD on Riot? I have not, but I know they're a Bitcoin miner and they are turning into a data center play. So I've not done deep due diligence on all these data center plays, but I ran Bitfarms, CleanSpark, Riot. I mean, Jason yesterday, he had no idea this was happening. He was like, what? The Bitcoin miners are turning into data center plays? I was like, yeah, they're all turning into data center plays because all these charts are going vertical over the past 3 months. Like, and these stocks were stuck at freaking, $10 for like the longest, even when Bitcoin was going up 10x. So yeah, I don't know if there's massive DD to do on all of them other than betting that they have the facilities and the executive teams to be able to build out these data centers. That's the extent of, I think, the DD that needs to be done. Obviously, you want to look at their cash position and all that stuff. But I think if you believe in a name transitioning, you take a swing at it and you hope they can transform. I do think they are a bit speculative. I'm not going to lie, simply because of the fact that you don't fully know if it's proven out. But that's where you got to be in the weeds of it. Like Iran, you got to understand how many GPUs do they have? How much land do they have? How much access to future GPUs do they have? What streams of revenue could they get from which hyperscalers are they potentially working with? But if you take kind of a blind bet and just throw some money at any of them, as long as they are able to fully transform into a data center play, then it probably works out. If not, there might be winners in the category itself. But all of them have massive facilities that are just transforming, which are pretty incredible to see. Tesla's going green. Tesla right here, up about 0.5%. That is green. Oracle losing 100 million is not a sign. Yeah, also, dude, again, first of all, Oracle already said those numbers are fake. Second of all, if you lose 100 million to set up a data center or a billion, but you're making tens of billions based on all the renting of the GPUs, then I don't think that's like the thesis breaker for a company like Oracle. One thing the report did tell me yesterday, though, is that the GPU reselling licensing business could be very margin intensive because of competition. So if I ran Nebius, CoreWeave, CleanSpark, Bitfarms, all of these guys are competing with each other to get hyperscaler customers. Hyperscalers might have some more leverage and they might not be able to give them the best deal. Now, granted, if the demand is outstripping supply 10-1, then maybe all of them get to eat and they get to have their margin too because they don't have to compete that aggressively because there's just so much demand. But if demand is not to the point where like they can't negotiate any level of margin consideration for the company that's actually renting or scaling the GPUs, then yeah, you might not have the best margins on a Bitfarms or a CleanSpark. And I think because these data center pivots are so new, we don't exactly know what the margin profile looks like. But going into Q3 earnings, that's going to be the biggest thing I'm looking for from a lot of these names. And then I guess we're going to get a better understanding of what these pivots end up looking like. Nebius is red. Nebius, slightly red. 118. A little green, but did go down from 125. Big winners of the day, ASTS and Rocket Lab. Again, congrats for those that are in it. Absolutely incredible stuff. Duolingo's up today. Figma's up today. You got a decent amount of green today, but Rocket Lab and ASTS, just a massive day. Very exciting to see those portfolios get some love. And then Duolingo right there, up 4.3 as well. Is TSM above 300? TSM, wow, above 300. TSM market cap, 1.57 trillion. TSM year to date is what, 50%, 45%, 50.1, 50.9. Incredible for TSM. All right, cool. That is it for me. Thank you everybody for being here. I'll be back on the the market close, and we will keep going from there. So far, looks like a relatively greenish day. Might be a little flat, even though the S&P is up 0.5%. That's a pretty good day for the S&P. And so as long as this continues, you got some big winners on the day, but overall not too bad as we get into the middle of the week for this week. Yeah, Stock Talk is going to be audio only. It's going to be audio only. It'll be on Twitter. It'll be at 12:30, so in about an hour. And audio only. And yeah, it'll be 30 minutes. It'll be very it's a couple tickers. I'll be asking them some questions, giving my thoughts, and that's it. And we're going to try to find 2 to 3 tickers a week that we can introduce to the audience that are new tickers and just dive a little deeper on them. But, it's not a macro show, not a news show, not an opinion show. It's more so just like, hey, can we get a little bit more alpha by finding different? And Stock Talk he's a really good stock picker. I mean, dude, he had Nebius, he had Hood, he had Amcor. There's like 5 other names that I'm forgetting, but he's like really good at picking these names. He's had a really good year. And so, and he's also a good friend of mine. We used to do a show like a year ago, but then just like schedules got in the way. And so, so now we want to bring that back. So there you go. We'll be on X, Twitter. I'll link in the chat for those that are on Twitter or don't follow. You can follow me there. And we'll keep going from there. All right, so that's it. I'll be back on the market close. Again, no market open tomorrow. We'll be getting this root canal. And yeah, we should be good for Friday. Dude, I really tried to delay the root canal to a day where I didn't have to miss the stream. But then, like, the pain on Sunday became so bad. And I was talking to my friend the other day, and he was like, bro, you can't sacrifice your freaking root canal for the stream. I'm like, yeah, but I don't want to miss a day. He's like, dude, it's a freaking tooth infection. Like, that's not a good. So that was honestly, that was kind of stupid of me to delay it just to keep the show going. But I didn't want to miss a show. Like, I really, especially because in September we missed a bunch of shows. But I got to get it fixed. If not, it's going to be an issue. So. All right. Thank you, everybody. Word of the day. What do we got? Word of the day. What do we got? Amend. Amend is the word of the day.
Amend.
To free from faults or errors, to correct. I think I've heard this word before. I've heard this word. To amend, to free from faults or correct. So I have to amend my tooth tomorrow. And then we'll keep going from there. Just stream your root canal. Sam says, I'll do a market open. Sam, if you do it, someone's got to do it. I don't know if Jose's back from Arizona yet. I was texting with him yesterday, but maybe Jose would do it. But we'll be back Friday. By the way, have you guys taken a look at Steve? He's been making a video every day. He's turning into a YouTuber. He's putting out his thoughts on Oracle yesterday. The other day, he put out his thoughts on AMD. Like, he's committed to it, so I love it. He's doing his thing. All right. Thank you, everybody. Appreciate it. We will be back tomorrow or today on the close at 3:45. We'll see what we got going on. 12:30, I'll be live on Twitter for some audio stuff. And yeah. Then tomorrow we will not have a show, but we'll keep going from there. Again, congrats, RKLB and ASTS. Massive, massive day for all you guys. And hopefully we can keep this momentum going. All right. Thank you, everybody. Appreciate it. I'll see you guys later on the market close. Bye, everyone. Have a good one.